Good morning. 8 o'clock Central Standard Time. Friday, 19th of September, 2025. My, how time flies. Whew. Welcome to Risk Neutral Trading. This is my virtual trading journal. It's not for financial or trade advice. There's a disclaimer in the description here. Give that a read. So, Friday, Triple Witching Friday. Wow, what a week, huh? The idea of the stream here is that it serves as I believe journaling is important, and I'm not good at multitasking particularly, so for me to be screen snapping and typing and things that would be required for a conventional journal would dilute my focus away from the important thing, which I believe is trading. So I do this, it captures everything on my screens, and my voice here provides insight as to what I was thinking at the moment. I stream to YouTube because it provides another layer of transparency and accountability, and I can review the stream on any device, which is huge. I'm standing here, I have stand-up desks only, and I'm standing here from roughly 6 in the morning till last night, 10:30 at night, or 2230 actually. So, makes for a long day for an old man. As I said, it's not for financial or trade advice, so anything that I say is basically I'm talking to myself, and I'm allowing anybody to listen that wants to. The idea here is that I have a strong commitment to complete transparency and accountability, and that's why the stream is so long. I start every morning at 8, every trading day morning at 8 o'clock now with the pre-market, and we run through 1500, which is the cash close. You notice that my screens are the full monitor, not just the application, so you see any applications that I have open at the bottom, and also my clock, hour, minutes, seconds, and the date corresponding to the date in Bookmap or on IRT. So there you go. All right, let's get on with the numbers here. Not much this morning in the way of numbers or reports, and over with pretty much. There was nothing early this morning. We've got the Baker Hughes rig counts and some normal Friday things that are all 2-star. This is investing.com, which is free. You can pay for, there's a paid version, I'm sure, but I like this one. You can also see earnings and various different things. You can filter it for however you want, your time zone, what countries, the filters are pretty in depth. You can filter it for, any kind of country earnings or report information that you're interested in. And now I screwed that up. So let's have a look here. There's also earnings, as I said, nothing going on. And I like it because it's easy to screen snap and it's clear and concise to look at and read quickly. The second news source that I use now, which is I've just started recently actually, is Financial Juice. It has a similar calendar function over here, or docket function, but a bit more. The new guy's already given the speech. Wow, the new Fed guy. He hasn't been there a week. That's pretty funny. And he's still, he hasn't quit his position with the government. He's still an employee at the White House, which is strange. I didn't think you could do that. And here we have triple witching, which is huge today. And he's going to speak twice. He's going to speak this morning at 10 and again at 1500. Wow. That'll be real interesting, I think. Anyway, here's the docket, and then this is more of a squawk box feel, so you can kind of get a running idea of what's going on. It's also free, but they have a paid version, of course. All right, for the news. Now let's get into the pre-market here. This is IRT. This is my basic charting package. Here is yesterday's. This is a full session now. This is which is 1700 last night through 1600 today. I'll change these after the open this morning, but this is our yesterday's RTH session, and here we are with ETH. Basically, just carbon copy. Here we go. Also with the market profile. This is the ES Mini and Q Mini, and this is the micro composite chart, which is my version of a high time frame idea. This is a RTH session only, and these are daily candlesticks. And I see something strange here that I'm going to have to change. I don't know why this start moved over here, but it should be here. Anyway, I am going to, should be down here actually. These are daily candlesticks, and wherever price overlaps, I continue to draw the volume profile, and in so doing, it generates these high and low volume nodes here in the volume profile, which are indicated by these red and green lines, and then it draws a micro composite VPOC, etc. Now the high and low volume nodes are pushed automatically to Bookmap, as are the session prices from up here. And as I said, market profile. So there we go. We're pretty much on track volume-wise. Everything's green. We're up about 0.18% from in the overnight. And basically just it's interesting how yesterday developed. It started out real directional, and then as the day progressed, they were able to trade it into just a almost perfectly balanced rotational profile. Hi, Panda. Hi, baby. This is Bookmap. Now, it is my trading platform. This is the Bookmap Dome, of course. The micro composite chart. These are the basic flags that I enter manually. All-time high. It was pretty amazing to me that we got within 2 points of the all-time high which was put in the ETH yesterday, and they didn't take it. I'll be amazed if we don't take that today. This is the volume profile. Excuse me, volume profile for the full session. For the full session here, started plotting at 1700 last night, and we'll continue through 1600 today. RTH session volume profile, which will reset this morning at 8:30. You see there the high, and just within 2 points. I'm just flabbergasted about that. Anyway, this is a pretty important column. This is my notes column, and you'll see the statistics and migrating VPOC flags are there, and the title of the column I always reset every day to the open type for that day's RTH. First thing I'm going to do is clear the notes, and then we're going to determine the open type or the suspected open type, and it's pretty simple. There's only two criteria. If we opened right here, right now, yeah, baby, where would our open price compare to the previous close? We're higher than the close. And how does it compare to the previous range? It's within range. So the title would be higher in range. Now I do this strictly for myself, because when I review a screen snap or the stream, this tells me all the information I need to know about our opening configuration and how it relates to yesterday, RTH. It also dictates which column of statistics we'll use to input here by their associated price levels. This is the session prices pushed by IRT. And you'll notice that there's no indicators on my bookmap or my IRT charting. There are only a POC for both the RTH and the full session. The POCs simply mark the price at which the most contracts have traded so far in the session. That's all. And the naked volume point of control for the most recent RTH session, and I can't put that over here because it's actually going to be, it might be okay, is right here. And it's by definition accurate because obviously we haven't have traded yet, right? 1809.25. So this is the most accurate naked volume point of control for the most recent RTH session. And I'm going to try to get that spread out a little bit where I can. It's going to be right under this ETH. I'm going to get rid of that. That's not necessary anymore. My workflow on these levels is when they are not active, I change the text to black. So there's that. Now we have the session prices. Back to the levels here. We only have the POCs. We have the VWAP for both RTH and GlobeX, which is right over here. And we have the mid for the ETH, or RTH, sorry. We have a IB high and low. Now those are only, they're confusing to some people, but that's because of the naming, which is an abbreviation of initial balance. The truth of the matter is this IB high and the IB low down below us simply marks the high and the low of the first 1 hour of the RTH trading session, period. That's all there is to it. So now let's look at the statistics. And that comes from this study. Here, IRT conveniently highlights the correct open type, but only after the open. And so this is yesterday. Here's our higher end range. The way this study works is it looks back at 2,000 days. Of these 2,000 days, we opened higher end range 604 days. Of these days where we opened higher end range, price revisited the overnight volume point of control 503 times for 83.3%. We jump over here to overnight volume point of control, 83.3. And there is all there is to it. And then I will simply go down the list. The next one in order would be the overnight mid at 76.7, which is somewhere around here. It's hiding down here. It's hiding right under there, I think. Yep. Right under the settlement, 76.7. Something that's kind of nice. These are cloud note columns that are pushed from my IRT, as I said, and the same data drives this indicator that puts these price lines on at the same level. But the convenient part is this line indicator can show more than one value flag title at a time if one happens to be stacked. Now, right here we have the mid just a little bit under. You can see it just barely under settlement over there. If I open that up, it'll become, there we go. It'll become more obvious. There we are. The overnight high is 75.5, and that is way up here. And that's the number they couldn't get yesterday. And previous value area high is 71.5. And what else we got? Previous close is 70.4. And so it goes. I want to get to one of the IBs. The IB high is 75.5. Okay, that's a good one. I want to do that because that is right here. And that is 75.5, and I put in the IB high. Why? Because by definition, remember, this is just the high or low of the first 1 hour of the RTH trading session. So the minute we open, this is going to move to wherever the open is and be the high of, then start tracking the high of this new upcoming session. IB low is way below. Its previous high is 56.6. Here's what I was talking about yesterday. Look at there. We got within a couple of handles of this all-time high that was put in yesterday's ETH session. That's pretty phenomenal to me. All right, that's going to be enough of these to last us a lifetime here today, I think. See what we have for value area. Value area low is 54.6, way down there. All right. That's good for statistics for today and for the open, and these will not change, of course. Now that they're there, you'll be able to see just how accurately they work. And I'm going to stress again that these are not hard, fast targets. These are probabilities based on a look back of 2,000 trading days. This is looking backwards over 2,000 trading days. We revisited that price 83.3% of the time in the higher in-range open configuration. One of the most important sentences that you hear every day in trading, or statements, that most everybody ignores and assumes it's lawyer boilerplate, is the following: past performance is not indicative of future results. That is a huge truism from statistics. The outcome of the next trade is 50-50, having nothing to do with whatever happened historically. Therefore, these are just probabilities of the number of times this level was revisited within a 2,000-day look back, and 500 days filtered down to whatever it was, 604 days filtered down to higher in range. So there you go. Okay. Next, it's important to be able to trade. So we go to, in order to trade with Bookmap, we have to activate the trade control panel here, this click button, this padlock, and select a way that we will interact with the application to trade with the mouse. If you choose chart, the only place is the chart data column, DOM, both columns, both columns. Pretty obvious, eh? Now, I use multi-brackets, and this is where the risk-neutral methodology comes in. The smallest risk-neutral package you can use is a 2-lot because you need to have an even number of contracts. 2-lot, there's the package size. Then you choose a tick size, which is the stop for the entire package. In this case, in my case, I've chosen 12 ticks. Once these two are established, the risk-neutral scale, or the first profit target, is set in stone. It's for half of the package and for the same amount of ticks positive as the stop loss is negative. Then there's a runner. If you have a 4-lot, just that. Half the package, same tick size. Very simple. The key to it is that the minute you achieve this T1 target, the trade is risk neutral. The worst you can possibly do is scratch, unless you move your stop away from entry, and that is the cardinal sin of all sins. I also do the multi-trading thing here, which means that any trade I take on the screen is automatically copied to 4 others accounts. Okay, this is a TopStep evaluation account, and it copies to 4 others. Now they're all one trade away, one risk neutral package, which I just set up away from being funded. then my theory is to have a completely transparent zero to hero process here where the entire trip is transparently and fully, recorded transparently and fully with full accountability. After I have after I have determined that the I've got everything set up on that side, I don't need any of these bracket orders or anything anymore from Bookmap's trade control panel. I confirm the package size. I'm able to click the little padlock again. I get the real estate back. All of the same trade criteria or metrics are available up here as are right here. And I also get cancel and close all. So I get that real estate back and I don't need that control panel anymore. And I know that it's active and set for whatever I chose because it's still green. Okie dokie. I am going to now make a snap and contribution, which I do every day, to a place called, see why I don't multitask? I can't talk and do something I want. A place called the Traders Lab. It is a it's a thing called the Traders Lab. And it is a Bookmap Discord chat room started by a guy named Tom B. and continues to be led by him. And it's completely free. So you do not have to be, you don't even have to be a subscriber to Bookmap to take advantage of it. And Tom is a older guy like me. He's a professional trader, supposedly started back in 1980. Trades his own account successfully. And I believe he's the real deal. He doesn't trade like I do. He doesn't show his trades or trade live or trade, on stream. It's a Bookmap Discord site, so he doesn't do any of that, and he doesn't call trades. If you're looking for those things, then you're not going to find him over there. But there's a good crew of people in there, and there's some good advice, and he's a good guy, and I think good guys should be recognized for what they do. The important part about the Traders Lab is that nothing in there is for sale, nor will it ever be. Nor will you ever be solicited for anything. So it's called the Traders Lab. You got to join the Bookmap Discord server and then navigate to the Traders Lab Tom B if you're interested. The only site that I don't recommend any other site apart from mine or that I can that's public, including on the Bookmap Discord area, because I have certainly not visited all of the rooms and there are a lot of them. But the only other two that I ever did drop in on, were normal. The third word out of the guy's mouth was trying to sell you something. That's available on my website, or my mentoring's only blah, 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 which is perfectly fine. I prefer to listen to people that are making their money trading. Or, in my case, moving to that, to developing and maintaining trading as a business, which is consistently profitable and successful, rather than more or less like an internet guru person who's making all their money selling you something. So that's just me. You do what you want. I've done that chat, and the point of the story was I do a snap in there every day at about 6 with the reports, and I do this snap a snap of this view every day, which is just a higher, every number you wanted to know about our current status, and then looking back over several sessions, naked volume points of control. I started doing this a long time ago when I noticed in the chat that there'd be a flurry of what was the POC? What was the POC? What was the POC? You know, 1,000 people, what do you call it? Chat, texting into the chat, into the Discord over there when I had first joined there. And so I created this view, and it seems to have helped. So we're getting ready to open here. Let's hope that now are they going to take this stupid thing up and we're going to open higher out of range again? As I said earlier, watch this all-time high. Look what we're doing now. We're pushing right up here to our previous highs. Who knows what'll happen? It is triple witching. This has been the week from hell. If you are been at this a while and have kind of gotten used to things and how the cadence works. I mean, this has been one hell of a week. Rollover. Economic data on Tuesday. The world famous Fed decision on Wednesday. Yesterday, more economic data and some conversation from Random Risk and that crew. And today's triple witching. One good week to be on vacation. If you had the opportunity, that's what you should have done. So we've got 3 minutes for the open. Let's see what happens. I've been battling with this volume profile, resetting exactly at 8:30. For some reason, it started not acting right. I don't know. A latest update, maybe. I've tried updating to different versions at the suggestion of Bookmap support. I have the computer set with a task to reset to the GMT time clock at 7 o'clock. I've got Rhythmic set to re-sync this computer with the Rhythmic clock every 2 minutes. I don't have any other problem with anything else. It's only with Bookmap and with this restart of this column. So let's see what happens at 8:30. For years, I had it set to restart at time. The way you put this is, hope I don't screw this up. I used to have it reset at time, and then the date, and then the time. Now I've changed it to session start. Somebody suggested that, and it, again, is for the time, so we'll see what the hell happens. And this is only because I'm, anal or OCD or whatever you call it. But what happens is, if it doesn't set properly, then the mid, the VWAP, the POC are calculated based off of the data that is driven from this VWAP, from this volume profile. And I want them to be accurate, obviously. So now, here was yesterday's open. We traded all day and got back to, there's yesterday's open and there's yesterday's close. 10 handled. After all that fall roll. Well, one other thing of explanation, perhaps. Less than a minute now. This blue line is just a vertical line that I add at the start of every session, and it's just a visual clue for me. My new concept and workflow is that I keep the entire session in view until I'm anticipating interacting, trading, and then I can zoom in. But this way I have no question in my mind about context. So we're live, we're streaming, we're going to open here in a minute. I don't know what's going there. We've reset, and this, yeah, it looks like it's pretty close. It seems to have worked, maybe. It's kind of a puzzle that this hasn't moved anywhere. You see that the overnight volume point of control moved up here just before the open. wrong one. Wrong one. I don't know where that was. Oh, that was a close. I want the volume point of control. Remember, these are fluid, right? They're moving the entire time. Now here we have the POC, and I'll start adding my migrating POC flags. The reason I'm doing this is because previously I used to keep this out, somewhere around 5 minutes down here on the time scale. And so I would, obviously the yellow line continues to plot all day, but it would scroll off the left of the screen, and I wanted to know where we had been. Now that I use the new technique of the full session, it's not so important, but, old habits are hard to break, blah, blah, blah. So here we have the 830 number now, the open, and I'm going to put in my new vertical line right there, I guess. Good enough for the girls I go with. And there we go. Now you see we've moved down here. We've got the IB high and low as they should be. So great. That's wonderful. Maybe it's going to be okay now. Or at least close enough. Well, this is not functioning right, though. It's too early from the looks of it, because you see we're down here and up here. Now, that's not the case with IRT. What's IRT saying? 62. No, not even close. IRT is still quite a lot higher. This volume profile and the generated POCs here should be in alignment with here and here. The IB high should very definitely be right here, not up here. Irritating. Yeah, this is expensive stuff, these two software programs. I'll give it a minute to see if it comes right. And now I need to change my IRT charting to RTH session by doing this right here. Now this overnight will disappear, and now we're at the ETH, right? Or RTH, I'm sorry. I do this because to keep the value area high and low aligned as they should be with the developing value area high and low. The relationship should be, I keep them accurate. I push these session levels, session prices to a lot of people for free. I provide them free. If that would be helpful to you, say so, and I'll, like, subscribe, and put something in the chat, and I'll hook you up. I do it for free, and to a lot of people use them, so no problem. I start plotting and pushing those at 1700 on Sunday night through 1600 on Friday. We're still a little bit off on the value area low and high. This value area high has not come down, and that's wrong. There's no volume trading up here. and that's no good. The value area high should be at about 70.03 from the looks of it. And there should be volume here, right? So, damn. Now what happens if I go like this? I don't know. Change resets. Clear reset. Now, the way I have it set to reset, that didn't help. I don't know. Which came first, the chicken or the egg, you know? The IB low looks correct. It looks to me like the IB high is not showing the volume that's supposed to be up here, which is goddamn irritating. Sorry. There's the... I did it again. Somehow, again, I got that close there, not that there. Jesus. Okay, now we're right. Whew. Not that it matters, but you see what OCD can do for you. Still on mute here. I hope the hell I haven't been on mute the whole morning. That's going to be pretty disappointing. If I have, then oops. I'll just quickly... I'll quickly recover that, I guess. This blue line I put in just in case I don't remember. I just noticed my mixer was on mute. I don't know, so the voiceover wasn't happening, but I don't know for how long. I put this vertical line simply as a visual cue for me at the start of each session so that I can make sure I can glance left. If I see that blue line, I know I have the session in view here in the chart, and that means I have the entire context understood. We opened here, and what I'm complaining about is the fact that the volume profile didn't open at the right time or reset at the right time, so it's not properly indicating we should have volume going up here. That's irritating. Now, another thing I could do, I guess, is make sure that my IRT data is up to speed and I can re-download data, but I'll wait for this little bit of time here to get over. We're only open 10 minutes, remember. I'm assuming that I had these the voiceover going properly for when I set up the statistics and everything. I'm not sure when I would have put that on mute. Probably when I was going to take a cough, have a cough or a sneeze or something, I suppose. And then, yeah, I'm not a professional. Hey, Antonio, bom dia. Tudo bem? What a week, huh, dude? Rollover, economic numbers, whatever, PCE, I think it was, on Tuesday, and then the Fed deal yesterday, or on Wednesday, and yesterday was initial jobless, and today is triple witching, so yeah, a lot of fun. I did finally get the backtesting redone, I think, or figured out last night. That the code for the IRT backtest on the based on separated rules over time. Essentially, the backtesting parameters for the IB failure, which Rod uses and put forward for everybody to try to see what they thought about. And that I focused on it because it provides a framework to do any other testing that would more normal to trading rather than everything happening in one or two bars. You know, this is more of a spread out set of rules, only 3, but spread out set of rules. First rule is the IB high taken out. Has that been exceeded? You know, the statistic after the IB high, of course. And then at some point later down the line, does the price pull back to within the 3 to 5 point range? And then further down the line into the market, does the price trade back up to within 1 point either side of the IB high? If so, then that's the trigger to go short in the case of the IB failure. And I've been driving me crazy for a couple of weeks, but I finally got it last night late. I'm going to work on it or look at it again this morning and in a while here. But triple witching, and I be absolutely honest with you, I don't know what the hell that means. It's 4 times a year, which is coinciding with futures contract expirations. We have the big triple witching. In Europe, it's quadru witching because they still have the single stock daily options, I think, is the one that they dropped over here. Anyway, so we have the triple witching 4 times a year, and according to options guys, Sosnoff and those people, the volume is stacked up for this one to be one of the highest rollovers or witchings in a long time, many years in terms of volume. So whatever that means, beats the hell out of me. And yeah, happy Friday, baby. So here we go now. It's the world famous Friday. I don't know why or what to do with this thing, but it's just pissing me off. I'm going to redo the download. I'm going to re-download the data. There's some stuff you can do with IRT. Downloading data is pretty tough. That's it. It'll now pull a complete data download, or it's supposed to. There we go. Make sure that these numbers are correct. I'm sure they are. Pretty funny yesterday, or pretty interesting, how they started with a huge directional context day, just toothing everything, and then managed to trade it right back into a nearly perfect Gaussian distribution here. There's a little bit of a skew, tail skew down at this end, but yeah, that still stays the same. Okay. I don't think the NQ needs to be redone. The reason I changed the charting from full session to the day session only is to keep the alignment of the value area high and low correct with the developing value area high and low for the people who use these levels, these session prices, and rely on them pretty heavily from the sounds of it. Things changed a little bit here, it looks like. That redo. The developing value area high or low are for the current auctioning session. The value area high and low are for the previous auction. So if, last night up until 8:30 this morning, up until 7:59 or 7:39 this morning, the previous auction was the RTH yesterday. The minute we open today, the previous auction suddenly becomes the overnight. So this would screw up those folks because they're expecting this to be the previous RTH auction. Therefore, if I change IRT from full session to day session only, that alignment is correct. So there you go. A tidbit of useless information. But if you're using this software or thinking about it, these are things that I've learned over the years that are handy to have picked up. And that reload did not change the volume profile relationship up here. The IB high is still right there. So there's something missing here on this restart story. The restart story. And here we have the full session. You see how the blue boy had scrolled off the screen, and now I can make sure I have the full session in view to have a firm understanding about context, which is awfully important to me. That was something. Somebody said something right there for sure. And you see how we jumped up there and tagged out the EVO or the overnight volume point of control. And so bam. Oh, and we got our volume up here. Look at there. Now it's up to the proper, well, at least it lines up with the IB high. Yeah. Okay. I will be absolutely floored. I don't know. Today, the triple witching story. I don't know what exactly. What you can see that somebody's pretty intent on not getting above 15 here, 67.15. That liquidity's been plopped in there for a long time, and that's a lot. What I was going to say was, under normal circumstances, I'm still in shock that they didn't jump up here 2 more points and take out the all-time high in the RTH, because these guys are anal about that. They do not like the Asian or the ETH traders to have any kind of records, especially all-time highs and stuff. And we got up to right here yesterday, and that was put in. This was put in the ETH earlier in the morning, in the London session as usual, of course. I'll be pretty shocked if we don't get up through there, but not really surprising. And I'm changing these because it looks like now those levels, the statistics levels here are the statistics levels. The fact that there's some that are dynamic right up until the open, right? The overnight high and the overnight volume point of control continue to change up until the split second that we open the new session. So if I didn't pick those up, and I'm just 75.4, the overnight high, and you can see how IRT graciously highlights the correct column. Overnight high is 75.4, and the overnight VPOC. And if you notice these green here, we've tagged them. And I'll be absolutely honest with you, I had never noticed that before. That's pretty interesting. I didn't ever notice that. It changes the text color after the level has been hit. That's pretty cool. Wow. I've been using this for 10 years and I just noticed that. Jesus, talk about a creature, a habit, boof. Or just a creature. Maybe that's more to the point, just plain creature. And this is supposed to be 75 or 71.6. Okay. Not 0.5, so who knows? Who cares? I don't sweat the percentages of the points very much. What I want to do is have the level correct, because this is a historical record, right? And this, now that those ETH numbers have changed, then they will not again. And you see why I needed to put the IB high alongside of here? Because by definition, the IB high immediately moved to the top of wherever this current session was at the open. And I would be going, what the hell was 75.1, Antonio, or 5? I wouldn't remember, right? So I put the initial there, and I know. All right, clever boy. Okay, so What the hell have I done wrong now? Or am I doing wrong? Or did she do wrong? Or what happened? Who's on third? We got 25C over here, Antonio, this morning, bright and early at 8:55. It's been hotter than stink, and the air quality's been horrible. Welcome to Texas. Have a nice day. A lot of crazy stuff going on over here. Yeah, not anything. Thank God you are where you are. A lot of pretty crazy things happening. Okay, I'm liking the looks of this now. We've got the IB high right there at the top of the volume profile and the low at the bottom, so that's a good thing. My monkey mind is calmed now. It did restart at 8:30 by changing this reset configuration from time, which I had used always, to session start, and then putting in the session start at 8:30. And as I said in the early pre-market, I have created a custom task here in Windows 11 that resets my time, syncs my time to this UTC server at 7 o'clock every morning. And I have also activated a little option on Rhythmic that resyncs your computer clock to Rhythmic's market time every 2 minutes. That ought to be enough, I guess, huh? I didn't even know they had that function. The only thing you have to do, if anybody is listening and is interested in that, the only thing you need to do is Rhythmic has to be run as administrator. So you can't just click the little icon wherever it went. You can't click just the little Rhythmic icon, which I have here on my dashboard, here to start it. You have to go to the search and Rhythmic and then right click and go run as administrator. But since I only turn restart Rhythmic on Sunday, and then it stays live all week, I'm assuming that I don't have to do that every day. Yeah. Yeah. So here we go. And of course, I closed out a 401k and end of last week, thinking that I wanted to be out of that. Somebody else doing the trading, going into the rate number in case something happened, and now we've had about 3 all-time highs. And so I suppose I left a bunch of money on the table there, but since it's the only money I've got left, it was the result of my career, which suddenly evaporated a while back earlier this year when the company was purchased and the new outfit said, well, guess what? We don't need you guys anymore. Boop. That was not pleasant. But I rolled it over to an IRA here, which is self-directed by me, and I can trade it. So that's a different story. Okay, not a lot, but it's about, I guess it's like 2 or 3 months of Rod's trading profit, but it's a lot to me. So there you are. I'm pretty pleased with that backtesting thing. I am so freaking sick of this vetting these IB trades. I can't even seize trade. Yesterday, I thought I was going to get the trade of the day because we started out with a bang, boy, and context was straight up. And I thought, oh, this is going to be an opportunity for my IB continuation trade. And we went right up through it, boop, and then never came back with any kind of thing that I could trade. And fortunately, I did not, because I didn't get the trigger. Or I'd have been standing here extra pissed. I don't know if I can, how far back I can go with that. Maybe I can, no, there's the overnight. Okay, yeah, here you go. Ooh, look at all the sessions here. I wonder how many sessions back it goes. I didn't know that, to be honest with you. I never looked. So here's today, overnight, yesterday, okay. Now if I could do this like I think I can do it. Yeah, there we go. So here's yesterday's session start. We did what I anticipated in the pre-market, which was some responsive selling for profit taking, because inventory was 100% long all night. And then you see that we traded up through here, and here's 9 o'clock, and there's the IB high, and I'm thinking, ooh, this is going to be sweet. And we did this at 9. That's the low, IB low, right? Here's the IB high. Is that right? Wait a minute here. And then there was this. And back here, and down we went. Traded, and this came up, your favorite VPOC migration came right up behind it. No range here, particularly. And it didn't work out. So that was that. I am really sick of it. Be glad when this next trade is over with, or whichever one. That puts all the 5 of these into the XFA, and then I can just focus on the next thing. Plus, having having what I believe is that proper code. I tested it a couple times when I got it last night about 10:30 or 11, but I was tired, so I'll look at it again today. If it's working properly, then I can use the proper back testing, over a long data set. The way you can do, and interestingly with IRT, and I guess with any better backtesting engine, you can set up your backtest for, say, last at some point in the past. In other words, I want to backtest from a year ago till this new year, say I want to backtest this strategy over 2024. You can do that, and then you can actually even optimize, have the program optimize that strategy for that period of time. And then to avoid the possibility of curve fitting, you can do a forward walk, which means you take that optimized strategy and then you backtest 2025, which is new data that hasn't part of that previous backtest or the previous optimization, and actually tell a forward walk on current data on the current market, how that strategy would backtest and what would be the the expectancy and all of that. So it's hopefully I've got that worked out and I can stop this doing it manually thing. Really frustrating because it's time consuming and I don't have the time. I need to get this fully functional as a trading business, because this is what we need to rely on. Since my my rather abrupt and not quite so polite, we don't need you anymore deal happened to my career. Fortunately, I'd been doing this for a while and had been, trying to diversify. So this wasn't from the get-go, but still pretty rude awakening. I think TradingView has a pretty good way of backtesting stuff. I understand. I've not tried it, but I understand that. So maybe you're way ahead of me. All right. Okay, so our IB30's out of the way, I guess. No, not yet. Not yet. And this could be just a giant pain in the ass day with a huge volatility at the end of the day when they expire. Typically there's some window dressing and some stuff and repositioning, and I don't know any of that much to do with options, but rolling over, whatever that's all about. I know, the basics. Well, here we are. I guess I better monitor if this thing's even working. I don't have any speakers in here. This is a silent room. And the only way I can tell the audio sounds like or anything is put on my headset. Yeah, there I am. I can't be covering up Panda singing, you know. If I had speakers, then I wouldn't hear her. My little opera star. Okay. Let's see what we have in the way of music to get intrigued by today. It's interesting to me that this new Fed guy is going to give 2 speeches today. He's still an employee of the White House also, which I didn't even know was possible. He's going to give a speech at 10 and he's going to give one at 3. Wow. Pretty incredible. And here's our OPEC triple witching, 1500. Options expiration. And the reason it's triple witching is because it coincides with the contract rollover. And this happens 4 times a year. And of course, I guess we don't have, I don't know what's going on over here. It's just pretty crazy. I was always under the impression that you were innocent until proven guilty. That was kind of the saying we had growing up for, the last couple 100 years. And that seems to have gone out the window pretty much now. The orange one seems to be the one that decides who's what. I am hopeful that the Supreme Court steps up and goes, you need to just back down here a little bit, buddy. But I don't think they're going to because of who they are and the, past performance of them. This is a big one. I don't know whether you've heard about this or not, but the Supreme Court is to decide whether the tariffs are legal or not by October, so by the end of this month. And boy, if they say they're not, is that going to be, watch the market then. I talk about upset that you cashed in your 401k. Wait till that happens. If in fact it does, and I find it pretty hard to believe that they would, that they're going to do that, even though it may be a legal question and absolutely illegal. He does not have the authority to do that. There is no national emergency, which is what he's functioning under, which, that is the typical maneuver of all, shall we say, dictators, is that they immediately declare an emergency and then assume emergency powers. That is the whole playbook from the get-go with this guy. And the emergency is the fentanyl story, how that affects An island full of penguins? I got no idea, but you know. So we'll see what the Supreme Court has to say, and hopefully it won't have too long to wait. And now this Lisa Cook thing, you know, if she's committed a crime, then she should be charged with that crime and go to court. If not, then shut the shit up, you know. It was just like the director of the BLS, the Bureau of Labor Statistics, puts out the non-farm payroll 2 months ago. The numbers are terrible, because they're the numbers. But he's immediately fired, and it's fake news. Then Trump puts in his own guy, and guess what happened this past one? Worse numbers. That's amazing. And I guess you've heard all the story about this Charlie Kirk assassination, which is a weird dynamic over here now too. And you know, anybody that says anything, even though it might be true, about his beliefs and his you know, policies and stuff, are being fired from their jobs. Terrible that anybody's assassinated, of course, but that doesn't change because someone is shot and that's, or you know, assassinated, and that's a bad thing. That's separate and apart from the fact of was the person who was assassinated, you know, what were his policies and his beliefs, and was he a good person or not? If somebody assassinates the head of the, you know, the head of the mob, okay, that's a bad thing. Nobody should take the law in their own hands and assassinate anybody. But that doesn't change the fact of who the person was, and that's nobody seems to be able to comment on who that person was without strict and severe retribution being directed strictly from the White House. Jimmy Kimmel was fired immediately because he came out and said, you know, it's a shame that this happened, but the guy was a purveyor of hate speech. So was a commentator on MSNBC, I think, who said, yeah, it's a terrible thing, but you know, if your belief is hate speech and racism, and you verbalize that, inflammatory speech and whatnot, policies, you know, there can be a bad outcome to that. And that's all the guy said, and he was fired within minutes. It's pretty strange. And I believe that from what I've heard of that Charlie Kirk, he was, just a racist, straight up racist, white supremacist nutcase, as far as I'm concerned. And maybe I've, you know, but I mean, when you do some research and hear him actually speak and say things, you can't argue with it. So it's pretty crazy to me. The biggest disaster in American history was the signing or the passing of the Civil Rights Act. That black fella that was killed by the cop, whatever his name was, he got what he deserved. These are all statements from this Charlie Kirk guy. It's weird. I've never paid any attention to him, frankly. And it's terrible that somebody shot him, but I guess somebody was so motivated by or repulsed by his beliefs that that's what he did, I guess. I don't know. Hard to believe. The part to me that's the bad part is the fact that freedom of speech is being just completely overwritten by this group. Anything you can say, anything you want to say from their side of the aisle, but the minute you say something contrary to that, No. You know, that's like the McCarthy era. There was a thing in America that you may not remember called the McCarthy period. McCarthy era back in the 40s, I think, maybe 50s. I was too young to remember that, but it was terrible. And it was all thrown over, overthrown, and we're never going to do that again and all this stuff. And here we go. History repeats itself. So here we go. We got 10 minutes for the world famous IB. Let's hope I can get this trade out the window. And now let's look at this story here. First of all, the IB is the initial balance, and it is set at 930. And let me restate very strongly. The statistic is not set and in place until 9:30. It is a very, very bad idea to trade toward the statistic, and I have the data to prove that. We're below the VWAP and the VPOC and the mid and the this and the that and something else, and we're close to the IB low. We're going to take out the IB low. You get short, and then oh boy, do you get surprised. The statistic is not in place until 9:30, and that's when you can start to look at one of those trades. That's just a personal affirmation from me to myself here in the journal. Because I've done that way too many times. Whoa. Hi to Camille? No? No? You don't want to say hi? Oh, that's a big yawn. You come and say hi to me, but not him. If she's mad at you, dude, I don't know. Yeah, so at 9:30, the IB statistic will be set. Will be active. Let's start over. And that statistic is an old one from the market profile world, I believe. And it is one of our statistics in the study. And it goes like this. Greater than 97.9% of the time in all four open types, the IB high or low is revisited by price at some point in the balance of this current RTH trading session. Here's today. It's 98.0% of the time. The IB high or low is revisited. That is the statistic. It is not a statistic. It's not even a thing until 9:30. So that statistic has two trades around it associated with it that I'm aware of, and that which I am vetting. One is the IB continuation, where we would, let's say, trade up here, take the statistic, trade back, and then continue on. Or the IB failure, which is essentially a mean reversion trade. We come up to the IB or come down to the IB, whichever way, take the statistic, fluff around a bit, trigger down, and then revert to the mean. So outside in, or perhaps outside in. Now, those two trades are suggested, one or the other is suggested by the context of the day so far. And what's the context of our day so far? Well, it's rotational, right? Outside in, outside in. There's a few more distributions, a little bit more horsepower down here at the bottom. And this is where I'm stumbling a lot, trying to figure out where the context kind of changes and we go to a more directional trade. So, in my opinion, at this point in the day, don't forget that here's the open and here we are. I am expecting the mean reversion or the IB failure trade to be the one that is suggested. That's a hard one for me to take because we have a narrow range and I have a range requirement in my trade, which says that there needs to be an unobstructed path to the risk neutral scale or the first profit target in order for that entry to be valid. So what does that mean exactly? Well, there is, now first of all, let's get these at about a point high. That's the easiest way to look at them, I think. There's a point high. So each one of these is 1 point. Each price level is a point. Assuming that we take out here, and this is the entry point, what is that? Well, that's 11 1/4, huh? So there, let's make it 11. 1, 2, 3. There would be the risk neutral scale. Well, there is a big level in the way, a big obstacle with liquidity, and that's the overnight volume point of control. In the way, an obstacle, and then here's another layer or level of liquidity before we got there. So that makes it hard for me to act on that. And then we have several layers piled up and several more levels below us. So this IB failure trade for me is a tough one. And that's why I was so excited yesterday to hopefully have the opportunity for the IB continuation, which is the trade I've used to make all of the positive progress on this vetting situation that has all 5 of these contracts accounts within the next trade. One more positive risk neutral 2-lot trade and all 5 of these accounts are in the XFA, which is a major milestone. So there, remember that this is me talking to myself, and that's the thrust of this. And where are we with all of this? Well, here is our market profile. We jumped up here on a string of singles and then we just traded them out. Here's today, here's yesterday. The last 3 days. This is the RTH session. This would be the full session. This includes, you see how we got up here. We traded up through off of yesterday, or day before yesterday. We traded up here in the overnight, built out this big profile, and then the same happened day before. And if we go back to just the RTH, it looks a little different, right? It looks like a string of singles up here, but that's because we had all this trade in the overnight. Same way with here. Micro composite. Today, I guess I could make those a little bigger. If you're using IRT, if you select Shift and Control and then scroll in or out, scroll wheel in or out, up or down on your mouse, you adjust the width and the spacing of the candles, or in this case, see that, and the Brincos. A little useless tidbit there for you. And that's where we are. And here we are just slopping around the POC and the previous. There's the VWAP, and here's the Globex VWAP, and here's the mid, and couldn't be much more in the middle. And right just below our open. So, don't know. It's important to remember that, or to be aware of the fact that what are we at here now? Let's just call it 97, 96, half, 11. So we're at about 15 points range all in, and we have crossed over the Great Divide here for 930. So the IB statistic is in play. The high will no longer go up. The IB low will no longer go down with price, and the statistic is in play. There's a 98% probability that one or the other will be exceeded by price in the balance of this RTH trading session. What does that mean? Well, think about it this way. There is a 2% chance that neither one will be exceeded. Not very high probability, huh? And I think there's a 32% or something like that both of them are exceeded. It changes, but let's look. So IB high and low, it's 32.2% probability that both are taken out. 98% only one. What does that mean? That means that there is a 2% probability that neither will be taken out. I don't think I've ever seen that 2%. I'm sure I probably have seen it because I've been standing in front of these screens for years, but what are you looking for? Oh, lucky. But I don't remember ever seeing a situation where we didn't take the high or low, and that would be a good thing to be able to find programmatically. One of the things I'm excited for to get this backtesting working properly and the rules all figured out is to be able to do what if stuff like that. You know, that's real important to me. Well, what if right now my risk neutral package is what I have said it is, we talked about in the pre-market. It's the risk neutral scale is 3 points. The profit target is 12 points. And the risk neutral and the stop is 3 points, because that's the way it has to be. The stop has to be equal to the risk neutral scale. What if I make it 4 points? What happens? You know, those what ifs are big. Big question in my mind. I'm not sure it's important, but big question in my mind. And I want to be able to do that quickly. You know, if you had to do it like this, it's like, Jesus Christ, I wouldn't live long. You'd be older than Methuselah before you figured it out. Before I figured it out. And some people do the backtesting that way. Just scrolling back on the charts. I went so far here, because I don't think we're going to go anywhere anytime quick. I went so far here as to create a chart for backtesting. And it looks like this. These are the parameters for the IB failure. So there's the IB. These are custom indicators that I built for this chart. This is the IB high. This is 1 point either side of the IB high. And this is the pullback area, which is 3 points to 5 points below the IB high. The idea of the trade is that, get over here somewhere where we can look at one of them. Price takes out the IB high, and remember the IB isn't a thing until 9:30. So these lines do not start plotting until 9:30. Takes out the IB high. This is a bad example because it's a bad day, but trades down into the pullback range and then trades back up to within 1 point of the IB high. At that point, you short. In this case, because it's an IB failure. Now, the reason I did this is I was having no luck with the code for the back test. So I thought, well, if I put these references, these lines on here, I can scroll back through and manually back test it. But Jesus, you know, that's a long process, and and I wanted to be real accurate about it. So I put these reference lines. Some of the guys don't do that, and I'm not sure how. I don't trust myself to be that accurate and that unbiased, but they do. Good for them. Here's our trade today so far. You notice that we just turned 9:30, so now the lines are just plotting. We're below here. Here's current price. We haven't remotely gotten to the IB high. I started coding this just from the IB high side. So it's real simple that once you get one side working, then you just flip those numbers around and you've got the long and the short, right? We haven't even gotten remotely up here yet. We need to get up to here, take this out, pull back to here, trade back up to within these levels, these dots, and then that would be the short. So that's how you could do that manually. And those indicators are easy to build. I'm happy to share them if somebody has IRT and needs them, or whatever. Or, you know, like I'm sure Antonio, you could throw those on TradingView in the blink of an eye. I would guess. And look at this mess, man. Oh boy. Well, yeah. So here we go. I don't know where, but here we go. Man, we're still hovering in that 14-15 handle range, and I suspect this is not going to change. There's no I don't think there's any news on the horizon. It's interesting, this new guy. He hasn't been in the Fed a week, and he's got 2 speeches out. Wow. I guess he's still an employee in the White House. I'm not sure how that's can be, but it apparently is. There's no planned news. They don't even have. His speeches were not scheduled far enough in advance to have them be pulled in as pulled into this investing.com calendar or docket. So this is some extemporaneous thing that they're trying to put forward. And I'm sure that won't be positive, in line with all of the other comments coming out of the White House with the administration. And then what do we have? Well, not a hell of a lot. I don't see anything important going to happen. I mean, that's the probably the biggest, that 500-pound gorilla in the room is the unrecognized, unplanned risk, which is ever present anytime certain folks in the administration primarily get around a microphone. You don't know what they're going to say, or in the case of Trump, his social media thing can have a big, and there's nothing wrong with that. They're perfectly welcome to say what they want. But from our point of view as traders, managing our project of trading, that is an unrecognizable, unquantifiable risk, which is dangerous. Therefore, you should be real cautious putting your capital at risk. Do that only, in my opinion, on A+ setups and limited. These guys, if you're one of those who can't resist clicking the mouse, you're setting yourself up for a real disappointing story, I think. And again, nothing wrong, not a political statement at all. As a project manager, which is what we are, after you've established what the project is and who the resources are going to be, or what resources are required, the next thing every professional project manager knows is that you do a risk assessment and mitigation plan. You identify any risk that you can see for your project, and you figure out a mitigation for that risk. The worst scenario is an unidentifiable risk. Not the worst, but the most dangerous to the success of your project is that. If you're betting on the come, like I said, do not trade to the statistic. What do we got here? Well, we're below both VWAPs, we're below the mid, we're below the POC. Here's the IB low. We're about 1 point away from the IB low. I'm pretty sure we're going to take the IB low statistic. And so you get short. Now, may work out fine. My data says it does not, that you should wait definitely for the statistic to be set. And if you get short and suddenly somebody comes on and says, or some tweet comes on and says, well, we're going to cancel all the tariffs, guess what's going to happen to price? And you're in a trade for no particular reason. There is no statistic that's happened. There is no pre-tested, pre-vetted rules that have put you into that trade. So, there you go. We're $1 high, meaning each point here, each dollar or each division on this price ladder is 1 point. we've got the whole session in range, and here's the IB low, and there is our IB low statistic. Now, I'm faced with a real dilemma, and that is my range requirement. There is no point from here all the way up to the mean that qualifies for the range requirement on the trade. What the hell do I do? If I take my own advice and not put on any trade that's not an A plus trade in this environment, I don't put on a trade. And I can't begin to express how that sucks and how much I want to get this over with. This vetting process, because part and parcel of the vetting process here is that you cannot change the parameters of that 2-lot risk neutral trade setup, which I have used to vet these 2 trades. Can't change any portion of that. Otherwise, it's not valid, and then you got to keep going. Going to come down here and test settlement, perhaps value area low, which I think needs to be there. Ooh, needs to be there. What I was getting at to do with that, to do with the value area low. Sorry, I was on the wrong screen. I wish there was a way I could. I guess I just need to be more aware. I'm vetting the IB trades, the 2 IB trades, which is the IB failure, would mean we've taken out the IB here. We don't get any lower. We come up and the theory would be that we're going to trade back to the mean. That's the IB failure trade, which is mean reversion. Okay. That's that one. The other one is that we've tested up here. We can't get back into this IB range at all, and we continue on. That's the IB continuation trade. Those are the 2, only 2. So now let's say that I want to take an IB continuation trade, and I cannot change the stop parameter, the stop distance, or the IB, which by nature also dictates the risk neutral scale. I can't move my profit target to a particular price level that might be seem more reasonable to me than just having it at a fixed 48 ticks. Because if I did that, if I changed any of those parameters, then that trade cannot be included in the vetting process. How can you possibly do that? Think about it. The vetting process should produce statistics similar to, okay, I've taken 100 trades. Of those 100 trades, I achieved T1 60 times. 60%, in other words. I've achieved T2 another 75%, or no, it'd have to be less, 50%. I've scratched 20%, and I've taken stops of X%. But those that has to be based on the exact same parameters. So there you go. Now what are we doing? Well, do we feel lucky? The day is rotational and would suggest an IB failure. I don't know whether you call it my preference or my leaning or whatever it is the IB continuation trade, which would mean we test up here, we can't get any place, and we continue on. Now, the range requirement is not met, absolutely. Nor would the range requirement be met if we're going to look at a mean reversion trade. And another thing that's important to point out about this whole story, the goal is not to scratch. The goal is not to achieve risk neutral. The goal is to get to the profit target. You bet, risk neutral scale, big psychological boost. But that's nothing. That's a goddamn scratch. Stupid. Only focus on potential A+ trades. And this is not an environment with a potential A+ trade, in my view. There is no range requirement. There is, you know, here we do have room from the IB low to the, we've got 9 points to the mean reversion outside in. But we got all these obstacles in the road. Every one of these obstacles is a position where the price could go the other way. Now, what's going to happen here? Is this a continuation trade? That perks my interest, but wow, we've got this level and this level and this level and this liquidity down here. What's the statistic for the overnight low? I see that I didn't get that down there. 49.4% of the time. So only 49% of the time do we achieve this. The IB low. There's 97. Say you get short right at the IB because you think this is going to be an IB continuation. You're at 95. You're not scaled. Now you're sweating bullets. Not an A+ trade. Every one of these, any one of these levels or obstacles is an opportunity for price to reverse, as it did here, as it did here, as it did here. You know? And why the value area low doesn't have a line by it, I guess it's because I don't know. There should be a line here. This line here is the value area low. Now this flag is goofing around here somehow, and that's wrong. I can tell you that right now. This flag should be right here, or yes. Here's the value area. Here's yesterday's RTH session. Value area high, value area low. Below the low. So value area low is right there. Now the flag's back. Why this does that once in a while? I have no idea. Whoa, look at there. So how did that work out for you with a IB continuation? What caused that? Somebody said something right there. You can bet on that. Anymore, when I see a move like this, my first initial reaction is to look at the news. That's not normal. That's not a normal price action unless the high time frame stepped in to do that for some particular reason. And I can't imagine why. That's somebody said something right there. And boy, aren't you disappointed that you did the IB continuation trade down here? That wouldn't have been suggested because of the day type. The trade that would have been suggested is the IB failure, which you would be just, you know, all proud of yourself about. You didn't get to scale or to the target. I mean, even to the mean, but you did get your scale. So, yeah, I don't know. This is starting to sound like double talk to me. My conversation is starting to sound like double talk because that's the nature of trading. You can make a case. It's like debating. You can make a case either direction. That's why I believe approaching trading as a statistical business of probabilities is so important. Once you vet a setup, once I get through with this frickin' IB thing and have a vetted setup, very almost like, and I really admire quants. They code the trade process with zero discretion. You know, I have recognized in myself, as it's right here, my final entry decision is based on discretion, and that's wrong, and that's bad, I think. Or at least that's what I'm trying to eliminate. By statistically vetting which trade has the highest expectancy, and then going with that. Which brings me to famous internet guru crap about win rate. Win rate is completely useless internet clickbait taken by itself. I can have a 95% win rate and go broke in 10 trades. If my risk-reward ratio, which is the probably second most important thing, or if not first, component, then you're able to accurately compute your expectancy. Now, expectancy does take into account win rate and loss rate. To compute your expectancy, you have to look at a sample size of trades greater than what would be expected for a random risk situation or a random distribution. Let me go with the whole idea here. If we all know that the outcome of the next trade is 50-50, this is obviously a binary event. It can only go up, it can only go down. There's only two ways it can go, binary. The outcome of the next trade has nothing to do with what happened before. We also all know that, I hope. So what is random distribution? Well, look at this like a coin flip. We all know that a coin flip is 50-50. If you, we, whoever flips a coin 10 times, it's not surprising to anybody, I don't think, maybe a little kid, that we might have more heads than tails, or more tails than heads in 10 flips. That's called random distribution. The coin is not broken. The probability of 50-50 for that coin didn't change. There's only two possible outcomes. But the random distribution puts a group of one outcome in a row. Same way where in trading you can have a string of stops in a row. That's called random distribution. Other way around, string of wins. Same thing. So what you want to try to do if you're doing statistics is get a large enough sample size to get away from that random distribution. Back to the coin flip. If you flip a coin 1,000 times, you're going to be really close to 50-50. You're outside random distribution. And the more flips you get, the more that becomes the case. So that's important. Very important. And that plays heavily into vetting a statistic, because you want to make sure that you have captured enough trade samples to be outside of random distribution. In other words, when I quote those statistics, I say when I make up those example statistics that I achieve T1 60% of the time and I achieve T2 50% of the trades, or whatever the hell it is, and then scratch and then stop. You want to be sure that you're outside of random distribution. You may have the most fantastic setup in the world ever in all time history, you capture a data set within random distribution, and there is a random distribution of losses or stops, and you throw it out the window. You say, oh, that's no good. I had 5 stops in a row. That's bullshit. I'm not going to ever do that again. And you move on to the next one. And that's one of the key problems for a lot of traders. That's why they do strategy hopping, because they don't look over a large enough data set and analyze it statistically. If you've got 5 losses in a row and you look back at your data set, which is over 100 trades, for example, and you go, well, in 100 trades, I achieved this win rate of T1 and T2 and whatever, so many stops. Okay, this is still within my parameters. This is still within the parameters of my statistics, and I'm leaving this alone. Happens a lot, apparently. And this whole idea of approaching trading as a business of statistics and not just gambling or gunslinging is based on not any revelation of my own, but the revelation or the understanding of the most successful traders and hedge funds in the world. I'm just hooking my wagon to their star, right? Ed Thorpe originally was a math teacher in, I think, UCLA or something, and took a few of his students to Vegas, and they just kicked ass to the point that they were banned from coming back to Vegas to play 21 because they were playing strictly probabilities. Jim Simmons, most successful hedge fund operator with Renaissance technology in the world history ever. Ray Dalio, Paul Tudor Jones, Tom Sosnoff coming down into our current trader time frame. Tom the trader, the best loser wins guy. Tom B in Traders Lab. Rod, Garrett, Lefty, probabilities. Harry and MR a lot. Probabilities. And really working out. Rod is really inspirational in his trading and the results of it, right down to our level, so it's not something I dreamed up, is the point. If you want to read about it or hear about it from a historical point of view of how long ago it's been figured out, it was Jesse Livermore. And also Mark Douglas talks about his probabilities. That's what you've got to do. You've got to establish the probability of your particular setup having a winner or a loser. In my case, achieving T1 and then achieving T2, or a scratch or a stop. And every time that setup then presents itself in the live market, you take it. You eat your own dog food. That's why I think it's so important. I'm circling back around to discretion. That's why I think it's so important to get to a position where it's non-discretional. There's no discretion involved in the entry. You just mechanically take the damn thing when it sets up, because you are relying on your statistics and the law of large numbers. Now, if any of that sounds familiar besides those traders, it is the exact business model of a casino. They play no game, which they have not pre-identified an edge and the expectancy. And then on the casino floor, their whole mission in life is to play that game as many times as they can, knowing that the expectancy will work out by the law of will compound by the law of large numbers to their bank account. Simple. They know there'll be winners. They know there'll be losers. Nobody gets upset. They just deal the next hand. We should do the same thing. And finishing off on the idea of win rate being useless and, clickbait fodder, where win rate is applicable in our business is when used in conjunction with calculating your expectancy. And the way you do that, the formula is real simple. It is win rate times winners, average winner, minus loss rate times average loser. And that gives you an expectancy for that setup. And it should be over a large enough data set to be outside of random distribution. Now you have a number you can hang your hat on. And then you can figure out the Kelly criterion and the Saltino ratio and the Sharp ratio and all that other stuff. But then, start from the beginning. So we, looking at the market now up close and personal, what have we done? Well, we took out the statistic, we traded down, got back up nearly to the mean. Now we're back down again. Are we going to continue to just rotate mean reversion? Boy, looking at the profile, it would suggest so, right? What does the context say? This says retail soup, man. They are grinding those guys up who can't stop clicking the mouse. They're making a huge pot of retail soup. Wonder what that news was. When was that? 9:52. Well, this Mirren guy is speaking at 10, so he's started talking now. Yeah, he's already started beating the Trump drum about the Fed rate. So this expert that's been part of the Fed and in the process for wow, what a goddamn lackey. Look at this noise. Just read through that. Oh yeah? Is it really? He has no, I don't know what his, I don't know who this guy is or anything other than he's one of Trump's boys, and that's enough for me to know I put him in a real skeptical light. He's been in the Fed. I think he was ratified by the Senate on Monday in a big hurry-up event so that he could be part of the vote or on the Fed board. Now, something you may not know about the Fed that's important to know. There are 19 governors at the Fed or the FOMC. The voting, only 12 vote each time, and it's rotational, including the chair. So, he wants to convince colleagues to vote this and that. And talk about the economy. Talk about the two mandates. There is inflation and there is jobs. The big overreaching problem that I see is that the narrative gets hijacked so quickly. Misdirection, I think, is a big part of it. And that's enough of my conspiracy theory to last a lifetime. So here we are. I wonder if this is that guy. I don't even know what this mirroring guy looks like, to be honest with you. What I was going to say was another interesting thing, a fun fact that I found out that you can Google. Bissett, the Treasury Secretary, had his own hedge fund previous to being appointed to his governmental position, with which he promptly lost billions of investor dollars. Yeah. Now, I will say that he has not filed or gone bankrupt, because in a hedge fund, you can't really go bankrupt. I mean, you just lose all your investors' funds. Billions of dollars of which Bissett lost in his hedge fund, directed by himself. Other people in the government have gone bankrupt a number of times, 13 of them to be exact, for Trump. These are the people that are making decisions about the economy, the country. I just don't see, in a private world, I don't see how that would be possible, you know? It's kind of like everything else to do with the government, though. If you or I ran our checkbook or our business like they run the government, we'd be, you know, locked up or whatever in the blink of an eye. Deficit. Tell the bank you're applying deficit spending to your bank account. Let's see how far that gets you. It's crazy. Spending billions of dollars, all this noise about saving money and Doge and all that noise. Spending billions of dollars on many things that I don't agree with, that they keep absolutely quiet. Not to mention $200 million to build a ballroom on the White House. For what reason do we need a ballroom? Hasn't been a problem for 250 years. That's, you know, could that 200 million be spent somewhere else? Maybe we didn't need to cut Social Security or fire government employees, you know, that were doing a job, career people. I just think the priorities of spending and, you know, flying around, and I heard some staggering numbers that I kind of hesitate to quote, but I'm not going to bother. It's those are the kind of things that need to be thought of. Nowadays. Yep, have a good one, Antonio. Have a great one. Okay, where am I now? These are IB continuation triggers right here. And there's one for sure. But you know, the context of the day does not suggest that. Nor do these levels. But let's just see something here. Well, there's 96. So if we get to 93 at flat, here would have been, I guess, a risk neutral scale. But that doesn't mean to me that we should expect a an IB continuation. And like I said before, I don't know how this whole thing of the triple witching, I don't know how those guys think. We have quite a bit of liquidity down here to 90. Less. Here's the biggest resting liquidity at 67.15 still. This guy hasn't wavered since came in the market at about 20 after 8 or so. May work out well too. I just don't know. And I don't know my uncertainty. Here we come back to my discretion of not just mechanically taking the setup. However, the setup suggested by the context is a mean reversion, which would be an IB failure. This was the closest thing we got to that. And what was that? I don't know. That was something to do with news for sure. Or high time frame something. Nothing that you could, that is a risk event you couldn't control or do anything about. 376 stops. And how does that happen? Well, that's called a stop cascade. And the way that works is, figure each one of these at 100, right? Okay, so if you want to get up 300 or 400 contracts, if somebody throws an offer in here for 400 contracts, a bid for 400 contracts, it's going to take out 4 levels of price because they need the liquidity to fill that order. That's what happens right here, I think. That's the way I understand it. And it may not be one order. This is 376 for 16, right? It could be a whole bunch of 25s or something. But when they all hit at once, then you get a run or a stop cascade or a liquidity vacuum or whatever word you want to put on it. Now you need to be real careful that you don't start let FOMO eat on you. That you want to get short and, oh, we're going to break through here and take down to here and all these kind of things. If you got short right here, where's your stop? Right in the middle of all this traffic. Very, very poor trade location from an asymmetric trade point of view. Pretty well balanced. Here's our 2 little distributions. Right within, pretty close to the value area from yesterday. We haven't gotten into this string of singles at all. And I'm not saying that's going to happen or, oh, I tell you something, let's look at this. Light volume. Yesterday we were over 100% most of the day, and our ATR is down now around 4.5, 475. That means that for every minute, the average true range is about 4.75 points. I have no idea what they're gonna do. They are mean reverting though. They did once, twice, 3 times a lady. I don't know. Wow, again, huh? I don't know what to do with that. These kind of irrational pops like this are spooky to me. And is this a retest of the IB low for an IB continuation? beats the hell out of me. What is causing this right here? Two little volume by dots right up to this low volume area, to the developing value area low. I don't know, man. I guess I missed an opportunity there, but did I? I don't know. And I can tell you that if you got, short along here someplace thinking you were going to get that IB continuation and this happened to you, you're kind of bummed out about it all at the moment. As much as I hate to say it, I think this is a function of discretion being the better part of valor. And don't forget, this is settlement, eh? I don't know what to think. I guess that ought to be obvious. I just noticed something that I needed to fix. 6670 right there. Oh no, that's 6770. Ooh. Never mind. 6670. Right there. That is, amazingly enough, surprisingly, or not, this was the naked volume point of control for that day, and it is now the MCVPOC from see if that worked. Yeah, it did. I guess, didn't it? Yeah. I had that wrong, and we're getting somewhere with our VPOC continuation down here now. Completely contrary to the context and the whole principle of the V, or the whole theory behind the IB trades. So there, yeah, what are you gonna do? What are you gonna do? I'll be bummed. 96 to 91, well, that's pretty good. 96 to 93, that would have been the scale. But how do you do that? How do you take that spike that quick? Really, I don't know. I don't know how many nanoseconds that took to happen, but I'm not quick enough to do that. The only way I can see you doing that, getting that trade, is to have either been in it here, where you expected this, and you had a resting order here. Then you would have been triggered in, and away you go. Now would I like to be short right now? You bet your sweet butt. I would like to get this trade off my book so bad I can't even see straight. As a result, I'm extremely conscious of that emotion. That's the same as FOMO or any revenge or any of the others. And you're never going to get rid of any of that monkey mind stuff. Ooh, wait a second. You know, none of your monkey mind things are ever going to go away. Am I really regretful? Yep. I certainly am. Ooh, look at the previous low down here. I didn't even see it. I'm dropping the ball big time, I guess. Now I'm starting to get even more pissed. Previous low was only 35% that we get down here. I'm looking right here, see? 35% overnight low, previous low. Boop, 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 boop. And would I like to be short now? You bet your sweet ass. I'd be approaching my target. Had I gotten short right here, I need 12 handles to be at my multiple target for my risk neutral 2-lot trade. And that would put all 5 of these accounts in the XFA. I'm trying to work out, I think I've pretty well worked out how to show this account story on the here on the stream without divulging all kinds of, you know, password or whatever else that is, you know, stupid to do on the internet. Especially something like this, which is up for all perpetuity, you know. This, I don't plan to ever take these streams down. YouTube may at some point, but I'll certainly never do that. That's part of the transparency. Now, I don't see any way I could have gotten that. I could have gotten this one. But again, this is the IB continuation is not the suggested trade here. So I need to rethink that whole idea somehow. And that's where vetting, I hope, comes to play, backtesting. That's where I hope the whole backtest story comes in. And this is not part of the betting trade now. And this is also stupid entry. This would be FOMO or chasing, right? You get short right here. Where the hell's your stop? Right in the middle of all this traffic and these levels. Bad idea. What you want to do is have where is asymmetrical trade? You want to have an asymmetrical trade location. And that means where the risk to reward is an asymmetrical relationship. Very little risk, a lot of reward. You flip that, you know, or you invert the curve there, you're in big trouble, I believe. Now back to what I was saying on the monkey mind story. Whether you believe in evolution or creativity or creation or whatever, or, you know, just shit on a rock and the sun hatched you, whatever it is you believe in. I think everybody agrees, at least I think so, that, humans have been around and have been evolving as a species for a long time. And we have a fossil record of that. So how can anybody argue with that? And in the course of that, not only has that evolution been happening to us physically, it's been happening to us mentally, and our minds have been getting big, our brains have been getting bigger and more complex, and that's also, a fossil record just by the cranial size and brain cavity size and all that stuff. A lot of things that kept us alive 1,000 years ago kept us from being, it's natural selection. If we reacted to fear of the grass wiggling and we went the other way, we reacted against risk. We were not risk seeking, but risk avoiding. We probably lived another day, whereas someone who was risk seeking in those days got eaten with somebody else's lunch, maybe. So that's how selective adaptivity can happen, and how I believe we got where we are. The point of this story is that your monkey mind and mine has been developing a long time, and those things are in there. They're baked into the wiring. Risk avoidance, desire to be right, all these kind of things. Selective, pattern recognition, remembering favorable outcomes much more than we recognize or remember negative outcomes. That's all baked in. You're never going to get rid of that. In our world here in trading, that's FOMO, chasing, revenge trading. So what you have to do is some people, Tom calls it, hide, like Jekyll and Hyde. So what you need to do, what I believe you need to do, is you're never going to get rid of those emotions or those thoughts. But what you must do to be a successful trader is to recognize that you're having those thoughts and not act on them. Even if it's to a point of the minute you recognize it, you just push the mouse away until you know that you're out of that adrenaline area or whatever it is. I want this trade to be over more than you can possibly imagine, so that I can be on to the next thing and away from this vetting of the IB trade. But I know that I cannot. I know that this is a bad trade location. I missed this, and looking at this constructively, I don't see how I would have put a resting order here, because it's contrary to my definition of an IB, of one of the two IB trades. This is still rotational. Look at it over here, even more so. This is not a directional day, I don't think. Or I need to get even more basic with my interpretation of a directional day and rotational day. I've talked about at length here before, not recognizing when rotational becomes directional, not being able to flip between, I'm expecting an IB failure and it's really the IB continuation trade. I'm not saying I have an answer to all this. Remember, this is my journal. I'm talking to myself and I'm thinking out loud here. Another thing, which may be extra boring, but here we go again. My journal, my ball, my bat. There you are. I believe that our subconscious mind, and this is, again, not something I dreamed up. This is something that's been proven psychologically. Our subconscious mind believes what we tell it. If you continually tell yourself that, I can't control my trading, what can I do to keep from overtrading? If you keep telling yourself that, you will have a problem with that, absolutely. For an example, I'm not successful. I'm terrible at this. You will be. I believe that. So a lot of what I try to do here is be positive and, positively affirm things that I think are important. And one of the things I personally know I need to get away from is looking at the news a lot, because I can't I just get overpowered with what I think is objectivity about the state of where we are over here now, and the current government and things like that, and it's foreign to me, and so it brings up negative thoughts like right now, and I'm going to stop talking about it. And it's sure as hell I'm not going to do anything about it. There's nothing I can do about it. So there you go. And the quickest way out of any situation is, for me to get absolutely consistently good at trading and consistently profitable. And then that's the ticket out anywhere. The beautiful part about trading is you can do it from any place. The best of all worlds I ever had was when we lived in Kuala Lumpur for 11 years. Trading, the market opened at 9:30, 21:30 at night. Anything I had to do during the day was finished. I had was in fantastic shape because I had plenty of time to do every morning I would climb the stairs in our building, 4,500 steps, 4,200 steps. There was a great gym, lovely quality of life there, super fast, great internet, fiber optic, blah, 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 blah. And for a quarter of the price that anything is here in America. Now, as with any situation where you're living in a advantageous exchange rate environment, it's only advantageous if you're earning the hard currency. If you're living in Kuala Lumpur and you're earning ringgit, you're just barely getting there and barely getting by. If you're earning dollars, you're living like a king. Same situation I had in South Africa or Africa, but really noticeable in South Africa. And so that's important to understand and recognize, but that was fantastic. You can trade and make money from any place. I am an American citizen, so that means I can have these accounts and whatever else. That's not a problem. And pay your tax and all those things like normal, but the lifestyle and, you don't have to be in those unpleasant environments, or Canada or wherever you want to go, Belize, If the situation becomes intolerable where you are, if you have a computer and a fast internet connection, you're in business, wherever it is. And I'm not saying it's intolerable here now, but it is pretty disappointing for me to see what's happening. So the light at the end of the tunnel, and my focus is on establishing and a confirmed, consistently profitable trading business. And I do that with discipline. I'm betting the IB trades, and therefore that's what I'm doing. Now look here. Here was that resting order. Oh boy, did I have one. Why did I have one? Am I having one? Are we going? Is it going to be IB continuation? We got down here within not 10 points, but 8. And now where are we? We're back up here at the IB low again. We are mean reverting. It's a bad day. This has been a shit week. It's been an interesting week. I'm sure plenty of people made a lot of money, but if you were, if you didn't make a lot of money if you made a lot of money because you had a strategic, well-planned system or vetted trades, please let me know. If you made a lot of money because you're a gunslinger and you're clicking that mouse like crazy, good for you. One thing for sure, this is not a stream of my way or the highway. If however it is you trade and you're making money, do not stop under any circumstances. consistently, you know. And I envy those guys. Like there's one or two fellas. One comes to mind, one of the daily TopStep TV guys named Dakota. Seems like an intelligent young, I think he's 31, fella from Utah. Have probably a lot in common with him on other levels. He trades TopStep X, which is about as stripped down, bare bones platform as you're going to ever want to get. He doesn't use volume. He doesn't use volume profile. He doesn't use session levels. He doesn't use any indicators. He doesn't use VWAP. He doesn't use mid. He doesn't use anything. He uses, well, let me see if I remember this, 5 minute and maybe a 100 tick chart when he's going to get in a trade, but mostly a 5 minute chart. Just looks at, okay, well, we had some consolidation right here, so this looks like could be resistance. Maybe he'll draw a box when price gets up there if he figures it's going to go down. He's last year, I think it was last year, has withdrawn, taken payouts from TopStep of over $250,000. Hey, I nothing but envy that guy. Now he's financially secure. He made his money early on in his life trading options and still does so. But the point is, if you can trade with nothing, bare bones nothing, he doesn't have to pay. I pay a lot of money for these programs, Bookmap and IRT and all this crap. It's free. I pay for data. He does have level 2 data, which even at TopStep X you have to pay for. Here's TopStep X. Let's just open that bad boy right over here. This is all time sync. Oh, look at this. Your computer clock is not synced with the correct time. This may affect your trading accuracy. Wow. So my clock is not synced with TopStep X, but it apparently is with Rhythmic somehow. Anyway. Now, he doesn't have that. There's the ATR. Oh, I don't know why this is showing up down here. It should not be. Anyway, he didn't have any of this stuff on here. Nothing. Except this chart. And I think it's 5 minute. Yep, there we go. And he'll go, well, let's see, see if I can draw a box without entering a trade or something stupid here. Okay, well, so let's see. Looks to me like we've had support right here, huh? That's kind of been support we've had over the last however many days it is. So I think I'm going to go short here. Trade it up to the mid. I think we're going to go back short. Boom. Doesn't have volume profile over here. Just has I don't even know that he has a dome. Maybe. And this, you'll notice, is level 1. So I'm not paying them for level 2 data on TopStep X. I pay them for level 2 data for the Rhythmic connection, for sure. And I have to pay Rhythmic for market by order data and, Bookmap and all that crap. But that's all he does. And I don't know why I can't make this ATR go away. It should be. Super trend, I don't know why ATR is not showing up down here as an indicator and why I can't get rid of it. So, you know how well I am versed at TopStep X. I would have thought that was an indicator. Oh, there we go. No, I didn't mean to do that. What I meant to do was this. There you are. He wouldn't even have this pain down here. And he makes a couple $100,000 a year on TopStep, trading with TopStep live. Can watch him. Amazing. And so envious to me. Now this is the easy because they automatically roll. This is not the micro. This is the full easy. This is exactly the same as what we're watching over here. Does this look the same to you? So where the session starts right here. Yeah, right there. There's a session start. Can I do a vertical line somehow or another? That's, very envious, very enviable. I got that TopStep X by the way to see if I could use it, and it's $18 a month. So I continue to keep it around to try stuff out with, and every once in a while look back at it to see if you can't even do bracket orders there. Bracket orders, never mind multi-bracket or any of that stuff. Can't do any of that yet. Or you couldn't last time I looked. But guys like that, are making money hand over fist. And there are other guys there that we're still holding our mean reversion. We've expanded the range out a little bit. And we've taken out our IB low, which we already know. How low can you go? Right. There was 930. Where's 930? There's 930. So there the statistic has been set. And here the statistic has been met or taken out. Achieved. Now, if you want to look at the Renko chart, what happened over here? Well, big selling tail down here. Didn't get anywhere. Now we're trading up. So we have higher highs and higher lows. What does that mean? I have no idea. That's the magic of trading. You can stay, as I said earlier today, I think somewhere or another. It's like debating. You can debate both sides of any story. And if you're good at it, you can be convincing. Yeah, boy, am I tired of this. Oh, I want this over with. This vetting process. And one of the reasons for that is I'm leaving a lot of things on the table, okay? Trades setups that are occurring that are not IB setups. The mean reversion being one of them. which is just probably the next one I'll vet because it's easy. It will be easy to do with the trading rules that I've developed for the IB failure, and we'll see how that plays out. But over the last few days, it's been pretty obvious, I mean, and again, this is rear view mirror trading. This is the stock and trade of internet bullshit gurus, BS gurus. But outside in, well, in is right here now. Back here, in was down here. Well, outside in, mean reversion. And an important thing to understand is that the market is in a rotational or a mean reversion process or posture the majority of the trading days. Trend or directional days are definitely a minority. Now, sometimes the market continues going up to the right because we have consistently overlapping to higher value. In other words, it just keeps inching up, taking the stairs up, essentially, even though it's rotational. And here's a perfect example. Look at the higher time frame. Here was the world famous jobs market. Here's the world famous non-farm payroll. Here's where the guy got fired. Here's what happened this time at non-farm. And what have we done? Well, we just kind of taken the stairs up. A couple of bigger days, but mostly this is the Fed, this is the Fed rate day. Not any huge days or real wide volume or wide ranges. Terrible. And here we are right back at the mid, right? Remember that red line is the mid, baby. You couldn't get any more mid than the mid. That's the RTH mid. That's exactly the middle. We still have, not to be discounted, we still have the previous RTH high and that all-time high just 2 handles above there, up above us. We going to take them out? Who the hell knows? Interesting that the expected move is 67.21.5, and the all-time high is 67.19.75. This expected move story is something I'm just experimenting with. It's based on implied volatility at the money option strike for the SPX next day. The idea that, as I understand it so far, is that options people just use this expected move and expect that this line will contain or let me say contain trade, or shall I say this line represents basically one standard deviation, which would be 68% of the upcoming trade. I guess that's the way to explain it. What it is there is a website I found that has the expected move in days 1, 2, 5, or whatever for the various for the various strikes, and then I add that expected move for the, the next day, 1 day expected move. I add that amount to the opening price of the ETH session each night. And then on the weekend, I do the weekly expected move. And I don't change the weekly one. Maybe that's not right. I don't know. As I said, I'm just monkeying around with this to see if it makes any sense. And I have no idea if it does. But it's coincidental that this expected move I said every evening just after the ETH Open, and I just noticed this just now that it's 67.21.5, and the all-time high put in the ETH is 67.19.75. What does that mean? Beats the hell out of me. And you see over here the previous high, RTH high, and where the expected move is. The previous high in those high time frame levels are not on my session prices. What I was just looking at was down here. This shows the all-time high here at 67.18. That's a double number, so that's kind of even more confusing. You see how I guess it's not my eyes. I guess it's the numbers. Yeah, two numbers written over the top of one another there, so that's not very handy. Let me get rid of the fractal. No, that doesn't help. How about the naked volume point of control? Ooh, look at there. 66.61. Let's see if that ties up over here. 66.61. Oh, isn't it cute? Looks like I'm a quarter off. That's from the 17th. Love it when the plan comes together. Yeah, anyway, so here we go. We're one point high. We're now trading all over the map. Whoa, look at there. We brought down our POC. Wait a minute. Looks to me like we did. Yeah, that's the bright one. The brighter POC is the RTH, and the more muted one is the full session. So we jumped from 97.47 to 10,500, and that's all there is to this migration of the POC. If you want to seem like a fortune teller to all your friends there, you don't show them your volume profile with the numbers on it, and then you're able to tell them, oh, stand by, we're going to have a VPOC migration down to blah, blah, blah. And everybody goes, ooh, how'd you know that? Oh, look here. Now it's going to come back up. Watch this. 10,230, 10,296, 10,300. We're at 10,500. So 200 more contracts trade off right here. This is going to come zooming right back up. It's going to be a crazy Ivan. I predict. And will they go up and push that towards that all-time high? Not out of the scope of possibility, that's for sure. Does any of that matter in my world at this point? Not really. When the range gets expanded like this, remember that the IB failure trade is got to be around here as the IB continuation trade. Also, it's around the IB. So from down here, it looks great. This is where mean reversion looks juicy. But that's got nothing to do with the trade I'm vetting, which is why I'm so excited to get rid of this, get it over with. Let's throw 200 more on here and show everybody what a big shot I am. Let's throw 300 on here, and then I can be a magic fortune teller. They're gonna do it here pretty quick. Why do you suppose? Now we got the tick below us is building now. Why do you suppose that one tick matters? Being defended by somebody, I guess. See what I mean? Now this tick is building and this one is frozen here. This has only got to go another 100 or less to get over here, where we will, and this will now migrate up. Should go now. Oh, look at there. 15 contracts. There we go. Now it's coming back right there. 10.8. You see there? From 10.5 to 10.8. We migrated right back up here. And ooh, aren't I a fortune teller? No. It's just data and math and probabilities, statistics. Unfortunately, or not, that's what it is. To properly use that is the skill that must be acquired, or the mindset, or the methodology that must be acquired, I believe. Will we run up here and take a new high out? Maybe. I think we have a very good probability of going up here. Well, we have a 56.6% probability to getting up to this previous high. We have a 75.5% probability of achieving the previous IB high. We have a 75.5% probability of achieving the overnight high. Kind of sounds like that might be a way to go, huh? And 71 to get up here to the value area high. Well, we've already done that. So, I mean, we've already taken out these. These we have not done so. Does any of that mean I can take a trade? Nope. This was not valid because there's only 2 points. And once we get up here, this is going to be pretty difficult to do as an IB continuation trade because it's pretty close, right? Once we're here, it's 11. 18, that's only 7 handles. We need 12 to get to our profit target. Okay, you call it a new all-time high? Yeah, maybe. And even more difficult is the fact that 71 to 12, 11 to 12 half to the first obstacle. That's not the scale. Yeah, it's just irritating. And I'm sure there's plenty of guys in the TLab and Static that are doing mean reversion are just happier than pigs in the mud down here. I am sure of that. Back at the Open. So far, we've gone exactly no place in 2.5 hours. The volume's picking up. The problem now is, if you're thinking like I am, which is the more likely? Take out up here and then mean revert back down because it's rotational, or are we going to try to get these highs? So far, the day has been quite convincingly mean reversion from a 87 to 11. 23 points, I guess. Wide range the entire morning. Now the thoughts, if you're not doing a vetting situation where you have to stick to the prescribed package or, package, I guess, or bracket, do you go long? Minute you get scaled, you scroll, you trail up to break even. Those so many things you can do trade management wise apart from the vetting process. That's what's so frustrating about it. And can't take any other trades. I can't, because I made a commitment that I will vet these trades, and that's that. Let's look at the IB high, or the backtesting story over here. So here we are. Here's our day, right? Well, the IB failure from the IB low, which I have not coded up yet, but which we can see quite easily here, is very nice. No, it's not. Stopped out. But the way it would work is the following. The lines only start plotting at the 9:30, when the IB is ready to roll. So price fluffs around, price comes down. Here's a lower close. There's a open close above the IB. Here is a open above the IB, a close below the IB. That's the first rule right there. Price trades back up. Closes, I guess, right here within the pullback range. And then price trades down to here within the 1 point either side of the IB low, and you go long. Got stopped out in a heartbeat right here. So that IB failure trade wouldn't be the one that worked today. And it doesn't have a high win rate. It's like in the 30s, 40%. So it may not be it isn't my go-to trade. I don't necessarily, when I think of an IB trade, I don't think of the IB failure, typically because of all the damn levels in the way. Look at this liquidity laying in here. Isn't this interesting? Every 2 ticks. They got almost 200 contracts laying here almost every 2 ticks. I got to think that has something to do with... Oh, I'm sorry. Yeah, every 2 ticks. Because there's 1 point, 2 ticks. 2 points, there's 2 ticks. Yeah, every 2 ticks. What does that mean? Does that mean that those are magnets to attract price? Why would that be? Why would they be not a lid on the pot, but a floor under the price? I don't know exactly. It could simply be that this is resting liquidity for all these, for any stops below the POC, I guess. No, I'll put it on the right window. I'm busy talking about the wrong thing. Boy, I wish I need to figure out how to have something that tracks my eyes, so that because I'm always forgetting to click the arrow back and forth to which monitor I'm looking at. My eyes, if the thing knew where I was looking, then that would be real handy. I look like I'd seem less of a dork, I guess, here on the stream. And I am going to really stay away from any comments about the news or stuff because it's just not good, not positive. Yeah. So should we just throw let's just do a YOLO and go long. Hank. So let's just pretend we do a YOLO trade right here at 6708. See what the hell happens. This is not any kind of trade I have vetted. This is not any reason to do this. Just boredom. We're just pretending to be long at 6708. So we're not scaled until 6711, which is basically the IB high. Yep. Stand by, the boss is calling here. Oh, what I was going to say was I have an error code for breakouts because in my world previously, if I realized that if I were taking a breakout trade, that was FOMO. So I made an error code for it. However, by definition, an IB continuation is essentially a breakout trade. I've had to rethink that idea. And 262 contracts. Buy stops right there. Because all these guys were picking the top. All these people back here that picked this top and put their stop right above it. Just got hammered right here. Or anybody that was figuring we're going to turn around here through their stop up here. You know what I mean? Now I have to give it long and hard thought about what do I think about this. This is essentially, we're essentially coming up to an IB continuation trade, and we're only in 2 hours. I'm still of the mind that we're in a rotational day, but I see these targets up here, and it makes me wonder. Maybe I'll take discretion being the valor, better part of valor, and go participate in a wonderful repast with my wife. Don't know what to think. I'm just thinking out loud, remember. I would be pretty hard pressed. What do we got here? 300 contracts just above us at 12. Is that a lid on the pot? Or is that a magnet? The big question. If it's a magnet and they trade them out, it's only 1 point. Trade them out, turn it around. It's only 1 point. There's a lot of fuel up here. There's a lot of fuel above this. It was 200 of them were taken out here, 260. There's a whole buttload up here above the ETH high. Yeah, these are the questions. I'm gonna go do some pull-ups here. Trying to get my exercise in through the day. Because I tell you, the older you get, the worse it is to get back. It's easy to get out of shape, the harder it is to get back in. And this is a real deleterious. The trading is deleterious to your body. It's all mental. That's why I only use stand-up desks just for a little bit, and never now do squats now and then. I've got dumbbells in here. I'm trying to do a series of curls and things, and donkey mule kicks and whatnot. And I got a chin-up bar in the doorway here to try to do something. Try to keep my blood pumping for another day. Well, I don't think this is a high probability trade here. I will some pull-ups there. I'll hit the dumbbells, I guess, a little bit and keep an eye on it. And of course, hindsight being the perfect rear view mirror trading, you know. I'd be failure again, but not really. You could say this was a test, and then down we go. The problem is there's no range to the developing value area high. 1 point. There is between developing value area high and the value area high down here. There's 3 points there. So that would have worked, I guess. But that's, in my opinion, that's struggling. That's making up shit. You know, making up reasons to trade. And I don't think that's a good idea. It's not that I don't think it's a good idea. I know it's not a good idea. No question about it. Remember, this Renko is not set yet. It could turn right around and go that way. I haven't quite worked out how I would trade just with the Renkos rather than the. I've gotten pretty dependent on Bookmap, and it's something important to understand. The way I have this Bookmap set up, this is just a damn line chart. This is a line chart at the closing price. The last price, right? Which is a closing price. So if you had a line chart, it would look just like this. And why are we bouncing off the POC? And why are we going back up here? And, why? It's actually an interesting idea. So here is today's chart. This is a 1 minute candle. Same exact thing as we're looking at over here in Bookmap. There's the whole day session right there. Now all we have to do is maybe do this. Oh, wait. Yeah. I know what I'm doing wrong. I need to do this. I think. Okay, this is bullshit. Where is it? There we go. I don't know if this thing even has a line, to be honest with you. Oh, yeah, connected line. There you go. Continuous line. There you are. Now, look at this. And look at this. Exactly the same. That's all this is a line chart. The way I have it configured and the way I like it. Exactly the same. There's actually, I don't know what a connected line means. It looks kind of weird. Oh, it's points, data points, and then a connected line. Okay, back to the candlestick. Yeah. So there you go. So in reality then, except for this heat map thing, there's no difference between the data on my IRT and on Bookmap. Volume profile, how it relates to the full session, session prices. I do not have the probabilities in a column there, and the line price. And I do have, but I can't seem to find it. I've built a complete heat map with a dome in IRT, but I never can find the damn thing. I keep it off because it takes a lot of resources, and I never can find it when I want to. I'm going to prove my point. I'm going to take a step away here, and I smell too many good things coming from the other side of the house. I'm going to go see what that little gal's up to. My suggestion is, if you've got a vetted trade set up and you're making money, good for you. I do not have, and I am standing by. Whoa, everybody got excited about that IB high, huh? Maybe not. Maybe not. I would say there's still a high probability that we're going to take out that all-time high just because that's just stuck in my head. But the immediate thing you should think about when I say that is, okay, so what happened yesterday? Here we were 2 points away and didn't take it. I don't know the point of options expiration. I guess they roll them to the next month or the next expiration, I guess. But I don't know the point of what I believe the point is. They defend strikes. For example, if they've got a put or a call and they want to defend it to keep it so it expires worthless if they've sold that. That probably didn't make a lot of sense, but options are just like futures. With futures, it is a zero-sum game. Absolutely. That's why they call them a futures contract and not a futures share or bond or whatever else. For every futures contract that's traded, there is a buyer and a seller, one each. Therefore, it is absolutely physically impossible to ever have a situation where there are more buyers than sellers or vice versa. And if anybody says, well, price went up because there was more buyers or there were more sellers, that is, right away that person doesn't know their ass from third base about the futures market. The price goes up based on aggression. Buyers come across the inside market and hit or lift the ask. Price goes down because sellers are more aggressive. They come across the inside market and hit the bid. Never, ever is it possible to have more of buyers than sellers in the futures market. And I believe it's similar in options. So the way it works is, just as in futures, let's look over here. What is happening here? Buying, 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 buying up. Okay. For every one of these contracts that's bought up here, somebody has sold it. So when they get way up here, somebody is short all of these contracts. And how do they make money? Or the other way around. My belief or understanding is that typically it's the higher time frame that is on the other side of the counterparty to all the retail and all this little weaker hands directional moves. Or in the case of, short covering or something, all these shorts were down here. Everybody got short to here. They were all selling, and the opposite side of that trade was a higher time frame, buying. And how do they make money? They just start taking it up and clobbering all these stops, and up they go. That's the way the market moves, and that's why the market, goes up to go down and goes down to go up. That's the whole idea. That is the mechanism, I believe. And nobody has been able to argue that point successfully to me or demonstrate to me that that's not the case. Well, I thought she was calling me and she was talking to the cat, so there you are. And the other one, Tom, is asleep in the... He's got a special spot in my closet here in the office where he likes to make sure any freshly laundered clothes I put in there, exercise stuff I put in there, is properly covered with hair. And now we got so lucky to get two great pets, Lucky and Panda. Yeah, so that's how the market operates. And my circling back to the options story, as I understand it, a bit differently than well, I guess you could make a similar analogy. Let's assume that buyers are taking this up and the way that they would be profitable is to stay up here or continue higher. And so when sellers try to take it down, they would defend that price by continuing to buy or by absorbing the selling. I think it's similar in the options market. They defend those prices where they are or they have a big position. You know, if they have sold, options is a bit different. If you sell premium, then you get paid by the buyer that premium price for that option. The buyer believes that the price is going to go to that price, or in the case of a put, lower. And as a premium seller, you want to do everything in your power to keep the price from getting to that option strike. So you defend that to then have the option expire worthless, and you keep the premium, and you don't have to produce the stock or the future, the underlying, or make it available for the counterparty. Or the person that purchased the put or the call. And that's, I'm on the ragged edge of knowing what I'm talking about here. So if you'd be better off to just immediately zoom over and Google something about options, I think, than listening to me talk about it. But that's how I understand the mechanics, and that happens. There's daily options expirations where there's 0 days till expiry. There's ZDET or whatever they call it. That's a big fad nowadays. There's weekly and there's monthly. I think typically it was monthly expirations. And 4 times a year you get the options expiration and the futures contract rollover at the same time. And therefore you get this big triple witching I believe it's where the futures and the stock. Oh, it would have to be the futures and the option. I forget the other one. Let's Google that now that I've made a fool of myself here. I mean, we even have it. Financial Juice actually even has it here. Monthly OPEX, options expiration, triple witching, right? Now you can't really see this, and it's 1500, so there's no chart for it here. I don't wonder what that does. Let's see. Okay. That didn't look like much, does it? Okay. I don't know what the hell that did or was supposed to do. I guess it wouldn't do anything until, I don't know. I don't know what that icon is supposed to be. It's a chart symbol, looks to me like. Let's see if there's something up here we can chart. Canadian core retail. Let's see what happens. Nothing. Beats me. Beats me. So what I wanted to do was get to this OPEX triple witching. So let's zoom over here and let's go. Let's just see what we see. So it's 4 times a year, as I said. Stock options, stock index options, and stock index futures all expire. There you go. Stock options, stock index options, and stock index futures all expire on the same day. So there you are. Ooh, let's go over here and you can see it yourself. I'm sorry. That is triple witching. And there are 4 times a year, which I said. And there are the 4 times, and here we are. Because they coincide with the futures rollover. There you are. So now you know. Stock options, stock index options, and futures, index futures all roll over. So this would be the ES. This would be the options on the SPX, I guess, and the stock options for, say, Tesla, NVIDIA, or whatever, I guess. Don't trade them, don't know. I'd like to know about futures, actually, or options. What I know about them, or my feeling is about them, that there's a lot of risk involved. I know they're more expensive to trade considerably, and a lot more less direct than futures. So there you have it. And I think I'm going to just let the discretion be the better part of valor here and stand by. This is the noon hour. This is a triple witching Friday. This has been one hell of a week. Rollover. Financial data, I think it was PCE on Tuesday. The world famous Fed rate on Wednesday. initial jobless claims and housing stuff yesterday. Not much in the way of reports today, but it's triple witching. So it's a really good day to have been to the beach or working on your tan or something. And I have yet to be able to do anything with vetting this trade. I'm certainly not going to take an IB failure trade here with no range whatsoever. Notice how these liquidity levels that came in every 2 ticks have not lifted off. 2 ticks away. Each one of these session price levels, there are these prices on my index. Either the price index, the index here, which is the same as the dome. These are 1 point increments. So between each one of these is 4 ticks. So what we have over here is every 2 ticks. Boom, 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 boom. All the way up to here. And it gets thicker. Then they start over. This, I believe, is defense of the options people. By the options people. That's my story, and I'm sticking to it. And yeah, I'm disappointed about this. I'm very encouraged, though, that I was able to get the code worked out on the IB failure example of the longer-term multi-rule backtest. That's real encouraging to me. Smack a thumbs up in there. Subscribe would be really appreciated. And most importantly, or equally important, drop something in the chat. That would be, where are you? What do you think? How you doing? Who's on first? I don't know who's on second. If you're old enough to know about Abbott and Costello, you'll know what I'm talking about. Yeah, where are we? Here we are. This is a situation where, unless you have any trading day, is a situation where you should have a vetted trade and trade that. Something that you personally have vetted and you know the statistics firsthand. And that you know the statistics have a proper expectancy and a risk-reward ratio that makes sense. That's not upside down. You're not an internet guru type that has gotten. Now here's this big candlestick I was talking about down here. Got a big selling tail, and here we are again. As far as the backtesting goes, I'm pretty happy with how that's working out, how that worked out. What I was able to finally accomplish last night was to get the code working as I expected it to. And what I am trying to do is the following. This is, oh, well, look at there. It took a trade today. Huh. So as long as I have this rule open, it will take a backtest trade today. So note to self, if I don't want this to be working in the background, I need to close this off. I wasn't sure about that, but that's interesting to know. Here's how the trade is, here's how the back test is graphed. These are the rules of the back test. Now, I developed this one side only. So this is a short side. This would be an IB failure from the IB high short. And you can see where it entered a trade right there. And so far it's profitable. It entered right there, so far it's profitable. And those rules are as follows. First of all, these are reference lines having nothing to do with the back test itself, but these are for me to see stuff, okay? Because I'm still old school enough to want to visually confirm. The rule is real simple. There are three of them. The first rule is that the IB high is, the statistic is taken, and it's taken by this right here, this bar right here. I'm sorry, this bar right here. And the rule states that in the case of the IB high, and this, remember, this is an IB failure trade. IB, in other words, a failure at the high, and so a short. Price comes up from below. The close is higher than the low, and the high is less than the IB high. The signal bar is that the low, or the open, is below the IB high, and the close is above the IB high. That signal means it's been taken. The next signal is price pulls back to within this range, this pullback zone, which is defined as 3 points below the IB high and a maximum of 5 points below the IB high. So this range is 3 to 5 points below the IB high. And therefore, what we want is we want one candle to be negative. You know, the close is lower than the high, and it's above the top of the pullback range. And the next candle, the next bar, is that it crosses into the pullback range and closes within it. That's the second signal. The third and the third signal, which is the entry trigger, is that price retrades back up towards the IB high and closes, or the high, I'm sorry, is within 1 point below or above the IB high. And there you see the entry. Now, this is the just other graphics that I've set up here in the charting side of this world. This is the stop, 3 points above the entry. And this green line and that dot there is the first take profit, or the risk neutral scale. So right now in this bar right here that just touched that low, the trade is risk neutral. Now it will continue to play out until we get a stop or a take or a T2 or we reach the end of the day setting, which is this that I have here, that we don't want to be holding into the close overnight, etc. So this will automatically close the trade off at whatever I have set. And this is really wrong right here. That should not be there. That's the wrong price. Or no, that's the low. That would be right, I guess. I think. Wait a minute here. I got to think about that. I think that's the wrong rule. But anyway, we're not going to be there yet. I will let this sit. We've scaled, and we'll see what happens as it plays out. It's kind of interesting. I didn't realize that it was doing that automatically. And the way you can tell this is there is the trading signal sent to this chart. How do I know? How did I do that? I sent to the chart last night before I went to bed, apparently. And I haven't touched it this morning. So this puts it over here. Otherwise, you can backtest it right here. And then that backtests as you have set the backtest up. 20 days ending in the last 20 days or 1 day or whatever it is. The range, the instrument, number of contracts, that's the difference. I'm not going to backtest it now because I don't want to interrupt this trade over here. And look at, we're taking heat now. It's getting red. You see that? And I would suppose we're going to get stopped out because, as I have suspected over here, we're going to probably trade up towards this high and maybe even the all-time high. But, so there you go. But so this has been working unaddressed or unhandled by me until here. And now I'm really curious about something else. This is all screwed up. This doesn't have the close. What this is saying is that at position session close minus 90, that's 90 minutes from 1600 or the session close. Then when this criteria is correct, it will execute whatever action I have set for the rule, plus it will set all these VPound variables. What I think I've got wrong here is this rule price. And it should be close. And this is not the close, this is the entry. Let's see what the entry says. What is VPound? VPound 50, you see VPound 50. Is the high. And I don't want that to be what this is set as. This is where it sets the trade management. This identifies that the trigger is made, and then this sets the trade management. So it enters at the high. It sets the T1 at 12 ticks from the high, T2 at 48 ticks from the high, and 53 is 12 ticks above the high. That's the stop. And I think I don't want this to be a VPound. I think I want it to be close. And I should be able to do that. All right. Last open or close? I guess close. Oh, damn it. Damn it. Janet. See how quickly I get screwed up? What I'm trying to do is this one. There we go. Buy stop, add entry. I don't want to do that. I think I want the buy stop at close, if I'm not mistaken. Either close or last. The last price when it hits that time zone, whether the bar is closed or not. And we're almost ready to stop out here, which means we're getting ready to get up there to that IB high and the previous high. So that could be an IB continuation. I think I'm going to put that in there right like that. And save that, okay? That will only fire at the end of the day setting. Whoa, we got within a tick of the stop out. See see this right here? We got within a tick of the stop out. Now I've got my end of the day setting for the last price at that time. This is correct, and it's just playing itself out. It's already taken T1, and now it's waiting for either T2 or the stop. Or if neither one of those happens before the end of the day, boom. I cannot tell you how pleased I am to have finally, hi Panda. I finally worked this out because I was struggling for weeks. And I couldn't tell you exactly what the epiphany was last night about 10:30, but 22:30-ish, but it worked, and by golly, I'm happy about it. Hi, baby girl. Hi. How are you? See where Panda's taking me here. And there's the stop out to the tick right there. So that's working just exactly perfectly. I mean, you know, it's not a profitable trade, but the rules and the charting working absolutely as expected or as required. And now if you scroll back, all the way back as far as the chart data, this trade will be graphed. So that's pretty cool. I'm pretty amazed, actually. And does that bear out with everything over here? Let's see. 71 a quarter. Hold on. Yeah. 71.11 quarter is the IB high. We got to 71.11 and look down there on the at 12:41 we got to a high of 67.13.50 right there. Very definitely over our stop. And that part is working exactly right. And here are the 1350s. Now remember that the 1350 is not related to the IB high, so you can't go here by the IB high and say that this is a different trade, right? Because we're talking about the IB failure, and that's based on the rules. That's based on the rules here, not on what the price is doing over here. Well, I'm pretty impressed about that. Now let's let it cook. We should not take any other trades now. I don't think. And we'll see. I'm quite encouraged by that. That's really great. That's really great. Not the outcome, of course, but the fact that it's absolutely working unattended and as expected. Of course, this is only a back test. However, if this were set up to trade live, that would be executing over here. Let's hope that's not the case. I'm going to let this continue to wander on here to see what happens. First of all, I think we're going to get up here, as I suspected, to this previous RTH high and the all-time high. So this test here of the IB high was probably a good entry. 11.5, 12.5, 13.5. We need to get up to 14.5 here to be scaled. I don't think there's much problem with that. Now I can easily flip these on their head for IB continuation and VPOC migration, mean reversion. All of those types of trades can be vetted with this basic setup. Just directional change and basically changes with direction. I'm pretty happy about that. We're set zeros across the board. That's absolutely correct. Super. Super duper. Huh. I'm pretty stoked about that. That's a surprise, and quite a nice one. Quite a nice one. Look at this huge selling tail in the Renko here. Whenever the Renko moves this way, you get the tail to the downside, the wick to the downside, to the original side. What it's done is it's traded down to here, back up, and then a whole bar up to get this to move to the next bar. That's as I understand Renkos. Now we're coming into the 1 o'clock period, which is always a dicey time for me. We're going to pull back to the IB high and then make an opportunity for an IB continuation higher. I'm a little bit spooked here going into the expiration. Let me go finish the shower up here. Well, I'm just so happy about the way this is working out here with this backtest story. Wow. Obviously it stopped out, but it did so perfectly. It followed the rules precisely, and it was a scratch because here is our T1. Now, let me point out something about this particular, whatever they call it, back or trading something or another. I forget what they call it. I cannot write this code properly or get this. I can't get into the code to change this to add this first T1 target to account for that and the second one. So what it does is it thinks that it stopped for 12 ticks right here, and it did. But it made up, it won 12 ticks before it stopped for that. So this should be 0 or scratch. Anytime you see -1 on these playbacks or on this chart graphic, -12 means it was a scratch. And anytime you see +48, it should actually be +60 because it's not adding in the 12 other ticks from the T1. It just doesn't have the ability to do that. And I might mess with send them a ticket or something. So far, I sent him a ticket a while ago about how to code these rules up and have had no response. I'll actually close that ticket because I've got it sorted out now. So I solved my problem, good for me. But that's it. And now you see that we're not taking any trades. And that's good. I don't think we will, because we would have to pull back into this bracket, the pullback area, and then trade back up to meet the second rule again, because we're at zeros, right? So I don't think that that's going to happen. And I'm going to let it play out over here, though, just to make sure that it does not. And then I'll know that it is spot on. And I'm so encouraged because this waited through this entire day to get to here, to take the perfect scale, target 1 or rule 1, rule 2, rule 3, and bam. I'm real happy about that. There is a light at the end of the tunnel on this backtesting story, and boy, is that going to be great. Oof. Now let's get back to the business at hand here. I'll run through this in the closing recap. And I don't think I'm going to try to push my luck going into this expiration, targeting just 7 points, or at the most 8. So I would say keep your powder dry, but good luck. I'm so happy about the backtesting thing. I don't know what to do with myself. Are we going to get that pop? Looks like so, huh? Hmm. Look at this iceberg that's been trailing down here at 68 or 98. Excuse me. What are we doing here? What are we doing here now? Well, options, expiration, the big triple witching, and I'm spooked to, I'm late for this IB continuation to the all-time highs, but I'm spooked, and I'm spooked about it. I am pretty over the moon with the idea that my backtesting is that I worked out finally at long last night. The sequential rule system is working. Sweet. Here's the trade it took today, and that is the first qualified trade, and that's correct. It made the T1 and then took a stop. That's also correct, exactly within parameters. So I'm really, really happy about that. I'm gonna have to, I'll continue to do some back testing and work on verification, but boy, that's great. Now this is just for the IB failure, IB high failure. In other words, the IB failure from the high side. So this is a short, and I'll just flip these numbers for the IB long failure from the low side. But it's picking up the rules exactly. The next thing I want to try to do is be able to flag each bar that is rule 1, rule 2, etc. That doesn't really matter because I know what they are, but for example, I'll give you an example here. This is these are indicators simply for my visual reference, having nothing to do with the actual backtest of the rules, except for the fact that these levels are referred to and used in the rules, but not from these indicators. So this is 930. This is when the IB sets. This is 1 tick or 1 point above the IB, 1 point below. This is the pullback zone, which is 3 points below the IB and 5 points below the IB. The rule says, rule 1, price trades up this bar is, the close is higher than the low, and the high is below the IB high. The next bar, the open is below the IB high, and the close is above the IB high. That's rule number 1. Price trades, price trades, price trades. Rule number 2, price pulls back to within the pullback zone. The high of the open is above, or let's say the close is lower than the open, meaning it's a down bar, and it's outside the pullback zone. The next bar, the open is higher than the close, and it's within the pullback zone. Rule 2. Rule 3, price trades back up to within 1 point equal to or the 1 point below or 1 point above the IB high, and it goes short. It's exactly what it did. We trade down here and we take out our T1. We don't get to T2, it trades back up. This line is the stop line, and it trades back up to and gets stopped right there. Perfect. Perfect. And this is the T1, and there we just do it. Pretty cool. And this is all happening automatically. I was surprised when went to this, if you look later on here, when I went to this, this was happening because it was already on the chart. So this was completely unprompted or undesigned by me. It was just running the rules without any interaction by myself. And that is extra cool. What else we got going on here? Well, on the bigger picture, we're at 90% volume. Our ATR's pulled way back now to 2 1/4. It got up as high today as just 5 1/2. And here we are. Pulling back down to the IB high again. I'm not going to go the IB high long as a continuation trade because there's no range here. It's a 1/2 point. There's another 1/2 point. And then there's only 2 points till we get to the, well, just 3 points to the previous high. That's only the scale. And then we have only 4 more points to these targets. That's not an A+ setup, as much as I would love to have this over with. You got all excited and you got long right here with a resting order. You're not scaled till you're up here at 14. Actually, higher than that. 14.5 at the previous high. So, not a high probability trade. There's not enough range requirement for the entry. And I'm going to be bummed out, but I will be, it's trading. Pull back to the IB high. The reason I'm not going, look at here. There's the developing value area high. There's the overnight high. And there's our current RTH high. We have to get spot on entry at 11 here. And then trade to the previous RTH high to get scaled. Where's our target? 18. It's only 7 points here. We need 12 points to achieve our profit target. So I don't think that's an A+ trade. The fact that this is triple witching and we're coming into the close is even more reason that I am hesitant. I don't think that I don't know what to think about it. I've talked about this earlier, but I don't really know what to think about the triple witching and the effect. I mean, I understand what they're doing. Those people who sold puts or calls are trying to keep price from getting to that level so that those trades are not in the money. The person that bought them are not in the money. Because then the person who sold them is going to probably lose the premium and have to produce the stock or the future, whatever it was, to the person who wanted it, who bought the put or call. And that's how she goes. Now that could cost you a lot of money. That's the part about futures or about options that I'm just so spooked about. You see why it wasn't a very good idea to take this long and get all excited about the IB long. Price action doesn't look right, and we're too tight. And we're approaching the power hour. I'm going to go back and admire the backtesting. That is just so cool. I was so pleased to open this page and this tab and see that this trade had executed all by itself and done so perfectly, following the rules perfectly. That is pretty cool. One thing to mention here to anybody that's new. First of all, smack a thumbs up and subscribe would be great, and put something in the chat. But This trading system, whatever it's called, what is it called? Trading system indicator thing only has a limited functionality as far as being able to manipulate it or to configure it. It's configured for a single entry. Insofar, it's very, very, it follows the rules perfectly, and it indicates where this trade, where this contract hit its target right there, and it, follows whether it's in drawdown or in profit, and then I am able to mark the stop as set in the rules up here. And here is what it believes is the total outcome of the trade, but it's incorrect because it doesn't factor in the positive 12 ticks over here. So anytime you see minus 12 ticks, that's actually a scratch and 0. Similarly, if you see 48 ticks, that's actually a 60 ticks because both profit targets have been hit. And it doesn't know how to add the first one in. And I maybe can ping somebody, Bill or somebody, and find out how to edit that, but I don't really care. I know what it is, and this is only for me to just confirm the rules are being executed as I expected them to be. And they are. You see how long this thing waited in the open. All this trade, IB set here, all this trade, all this trade, all this trade, boom. There's the first trigger, first rule. I'm sorry. There's the second rule, and there's the trigger for the entry. And now it continues on, and that hasn't happened again. Pretty sweet. You have no idea how that makes me feel. And this is from a backtesting point of view, of course, but this could be set up to be traded. This could have traded live. Now it wouldn't have done the copy trading and all those kind of things, but as from over here in Bookmap, but definitely that would be an automated trade. From a backtest point of view, I hope this doesn't screw this up. Let's go back. Say 5 days. That would go back to Monday. Let's go back eight days or 10 days. Let's go back so we capture Friday. And let's see what that does. Well, it took 3 trades. It traded 12 shares, that's correct. $750 profit. There's all the stuff you want to know there. Now, here is the there were no losing trades. I can't quite believe that, but anyway. There's our maximum profit. Maximum loss should be $300. If there was a losing trade, it would be $300 because IRT doesn't allow me, or I haven't figured out how to change this to ticks instead of dollars. And it's a 33% win rate. And here would be the trades. Scratch, winner, scratch. Here's the 19th. Here's our scratch. The 15th, we had this full double point winner. And on the 12th, we had a scratch. You can go look at the exact times. What was, you know, what was each rule? How was it triggered? What was the result? What were the prices? And determine exactly if it's working as it should. So that's more than phenomenal. I am really over the moon about that. And I think I said this before, but this is not my, oh, we're going to get that. We're going to get it now. We're going to bust up here. We took that test, should have got it. And here we go. We're going to get the all-time high. You watch and see. You just watch and see. And I'm going to be pissed now that I was busy talking and didn't take this trade. And that is a classic rearview mirror reaction. Rearview mirror trading. I saw this pull back and became disinterested and went back to look at the back test. Now it would be scaled and in the money $3, 3 points. Not very much. Maximum in the money we're going to get, you could possibly get here is 7 points, maybe 10, and it might pop past that to get the 12. That would have been stellar. That would have been epic. Yeah, I'm distracted with this backtest result. That is really great. I'm pretty stoked about that. That's for sure. Oh, there we go. There's the pop through the high, the all-time high, and the Globex high. There we go. Well, there would have been 8 points, or 9 maybe. And we just slid into power hour with that bump. That is the 12-to-1 trade in action. And that setup or that configuration or that statistic says, and I shall quote, if the market is out of balance and we put a new high in or low between 12 and 1, there's a high probability in the 90s someplace that we will make a new high or exceed that high or low in the balance of the RTH trading session. Boop. Doesn't have to be but a tick, right? But that was the obvious target, and that's what we did. And I said in the pre-market, if you want to go back and verify that I'd bet money we were going to take a new all-time high before the day was over. Because this all-time high was put in yesterday morning in the ETH. Now that is no longer a thing. And we can use my workflow, which is to set this beauty text to black. And I'm going to take this one up here. Oh, oops. I'm going to take this one up here. What the hell is that? How'd that work? What's going on here? The hell hell is going on? God damn it. Well, I don't know what to think here. Okay, now this comes back down here. And this goes up here. And this goes back here where it was. Somewhere around here. I don't know. It's done now anyway because it was taken out. So this can be made black or gotten rid of, no problem. The important thing I'm trying to do here is get the new all-time high up here where in my all-time wisdom I said it was going to be. And this is the... Well, this thing is just not wanting to respond very well. Huh. There we go. And I'll make this one just go away. That was yesterday. That was at... Has that been taken out? Yes, it has. Okay. So this has been taken out, so I'm just going to get rid of it. There we go. New all-time high, 21, 67.21. And could I have taken that up? Yes, and wouldn't I have been happy? Probably. Right to the expected move. Isn't that funny? And I'm not saying I'm a wizard. This is something that I found out about and I have been testing, and it's kind of surprising. This is based on the implied volatility expected move for the at the money SPX option. 1 day strike, whatever you say. I set these expected move, which are just daily, every day, every night, on the RTH Open, on the first candle of the RTH Open. And then there's a weekly one, which is every week, right? But that's pretty amazing. What this has to do with, I believe, as I understand it, is basically this is one standard deviation either side of that open. So that would be they would expect that based on implied volatility to contain a one standard deviation move. I have no clue whether that's right or not, but that's pretty incredible. Just looking at that. And I'm over the moon about my little backtesting thing. And I'm pretty disappointed about the damn all-time high, which I took my 401k, cashed the 401k in or rolled it over to an IRA last week. So that missing out on a bunch of up move. But hey, it's safe and sound, so that's what can you do? Probably missed a 10,000 or something like that dollars, I guess. But here we have, this could have very well been an IB continuation trade, as could have this one, or 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 this one. You know, that's the hindsight. That's the rear view mirror trick. that so many gurus like to use. Well, I knew this was the correct one, so I got long. I didn't know about this one, or about this one, or about this one, and you got stopped, or any of them and you got stopped out. You know what I mean? Rearview mirror. And certainly this is no place to trade higher. It may go higher, but this is no IB trade. The last IB trade that I'll see today is right here. That was the IB continuation, which I did not participate in. Verbally talked about it, and then went back to admiring the backtesting coding. And we are in the world famous power hour, boys and girls. Traders. Hey, angry trader, welcome. Thanks. Every day, start at 8 o'clock in the morning with the pre-market and the, setup for Bookmap and IRT. Take a look at the numbers and reports for the day. Do a pre-market analysis of the overnight trade and what I expect is going to happen. And then continuous from 8 o'clock in the morning until 1500 at night, every day. The idea being to provide complete transparency and accountability. And yeah, it's basically my journal, so most of the time I'm talking to myself, right? And I'm happy to share that with anyone. But it's not pointing my finger at somebody else or anything. It's when I say you, I'm talking to me, basically. If it applies to you, then you can, if the shoe fits, wear it, right? Otherwise, yeah. If the session prices here would be of any interest to you or any help, if you have Bookmap and don't have them, or, could use them in whatever program you're using, or even an Excel sheet, I'm happy to share them. I share them with a lot of people freely, no problem, in Traders Lab and other places. And it's they push live from 1700 on Sunday evening through 1600 Friday, continuous and live. And they're pushed, the way I share them is from a Google Drive, and it's a CSV, so if you can use a CSV file some way. I started trading in 99. I was in Africa, living there. I've lived out of the country a lot, and I basically started trading in 99, managed to get out, move back here for data and connectivity reasons to the States. Proceeded to get my ass handed to me in 911. And then, did other routes, ended up in Kuala Lumpur, Malaysia for 11 years. I've traded different things at that time. Got into futures and stuff a few years ago. And this is where I'm at. So primarily it's Bookmap now and IRT. And that's it, no lies, bullshit, or rearview mirror trading. So, and everything is exactly live and real time. If you notice, I stream my monitors, not the application, so you can see any and all programs that are open and active, and you can see the clock, hour, minutes, seconds, and the dates, which corresponds to Bookmap and also to IRT. The idea is there is so much, BS out there that I'm trying to make sure that there's transparency and accountability. And it's my journal, right? So who would I be bullshitting? What's the point of trying to kid myself, Stupid. But anyway, that's where it's at. Now we're going to get another all-time high. Yes, I am disappointed I didn't go with this IB continuation, which would have been my final trade to vet for the vetting process and into the next milestone. So there you are. We're in the power hour on the big triple witching expiration. 4 times a year. The contracts roll over at the same time as the options expire, and so they call that triple witching. It's the stock options, the stock index options, and the futures indexes that roll or that expire today. Used to be quad witching, and there was one that they stopped tracking. I forget which. I think in Europe they still use 4, but that's enough trouble for me. That'll cause enough trouble for me. Just quickly, this is the micro composite column, which are the notes that I put in myself. These are the high and low volume nodes, and I'll run through the recap here and go all around the horn with all the tools and the explanations at about 14:30. This is Central Standard Time, by the way. IRT is right here, investor.com. Investor RT. It's this charting package. It's the other charting package. It's the more normal, conventional charting package that I use. And Bookmap is kind of the execution package. This is pretty, can be pretty in-depth or professional grade or whatever you want to call it, I guess. Investor RT, and it's by Linsoft. Linsoft.com. Yeah, trading psychology can be a pretty big bugaboo. Oh, look at us go for new all-time highs. Aren't you kids excited? Damn it. Damn it, Janet. The trading methodology that I use here is called, as the name of the channel would suggest, risk neutral trading. And it's what I do and we do and whatever else. It's based on I go through this at the pre-market, and I'll go through it here in another few minutes, but just for your knowledge there, angry guy. This is the multi-bracket. And this is essentially or functionally the risk neutral methodology, and it's real simple, which works for me. This is the smallest risk neutral package that you can have because you need to have an even number of contracts. So the entire package, in this case 2 contracts, has a single stop loss at 12 ticks. And now you can determine this yourself by, first thing you should look at is your account risk tolerance and parameters. What's the volatility in the market at the moment for whatever instrument you're trading, all that stuff, the ATR perhaps or whatever. Bottom line is you come up with a stop in ticks for the entire package. Once that's achieved, the first take profit target, which is the risk neutral scale, is real simple. It's for half of the package and for the same amount of ticks positively as the stop would be negatively. Now, with Bookmap, if you're not familiar, and you don't use multi-brackets, this is intelligent enough that I don't have to set up one for long and one for short. It knows which way I went, and then it just does the right thing, with regard to setting these profit target and stops. And then after you've done that, you've achieved risk neutral. The minute you achieve this first profit target, the trade is risk neutral. The worst you can possibly do is scratch. Unless you are really have problems and you move your stop away from your entry. And I don't know why anybody would do that. But anyway, because this means you're risk neutral. Then you have the runner, and it can be, if you have 4 contracts, simple. 4 contracts, 12 ticks, 2 contracts, 12 ticks, then 2 runners. If it's a high volatility like we had back in April, around the risk, the tariff story, I moved the stops out to 12 ticks. Same thing, half the package, and then these are the runners. It's that simple. And talk about psychological impact. The second you achieve this first target, you just put your helmet on and put your feet up and see how it works out. And that's all there is to it. That is the risk neutral methodology in a nutshell. And here we go with a little bump on the all-time high. And yes, I'm pissed, but anyway, that's how it works. And it's real simple, and it's real good for your psychology. Now, a couple other things here. This blue line is just a visual reference for me. I put this blue horizontal or vertical line at the session start, ETH, RTH. The purpose for that is I can glance left, and if I see that blue line, I know that I've got the entire session in view. And there's no question in my mind what the context is. Because context is the first thing to look at, and context is king, right? So there's that. Then this is a book map. These are micro composite data, high and low volume node data, session prices, and statistics. These all come from IRT. Well, I tell you, man, it's falling off a log simple, and you can't beat it with a stick. It's just like, okay. Well, ES. I used to trade in the NASDAQ, but the reason I trade the ES now, you can see that I still track the NASDAQ. This is investor.com. This is the ES micros or minis. This is the NASDAQ minis. And this is the higher time frame, my higher time frame chart, which we refer to as a micro composite. That's the day session only, the RTH session only. And it is the minis. And then this is market profile for the E-mini. I do plot and track the micros for each. And I push the micro levels also because some people trade them. But the way this works from a high time frame is this is the RTH session. These are daily candlesticks. Wherever price overlaps, I continue this to draw a volume profile around them. By the way I have the volume profile set up, it automatically generates the high and low volume nodes, which are these red and green lines on here, and they turn into, I'll show you on bookmap, and it generates a micro composite VPOC, volume point of control. Simple, huh? Then these are the session prices, and they're pushed automatically from bookmap to IRT. Now we jump over here to IRT or to bookmap, and here is the micro composite column. So here is the all-time high, which I just entered manually. Here it was that was put in yesterday morning in the ETH session. These are the high and low volume nodes. These are the MCVPOC, naked volume point of control, naked volume point of control from the 17th, which is yet to be revisited. And my workflow is that when a level is hot or active, text is whatever the text color is. When it's been revisited, I change the text color to black. And these are the high and low volume nodes, also pushed from IRT. This is the full session volume profile, which could be considered or called Globex. And then this starts plotting at 1700 every evening and runs through the entire day until 1600 the next day. Today, of course, being Friday, it'll quit at 1600. Then this will start again Sunday night at 1700 when I open back up online. This is the RTH session volume profile, which reset this morning at 8:30. And then we have the notes column, which is real important to me. And the first thing I do every morning is reset the column title to the expected open type. And there's only 4. I do that, again, for my personal reference, because when I look back at a screen snap or the recording, this title tells me a hell of a lot of information, and I'll explain what that information is. The way you determine the open type for the day is, where are we trading at that moment in the pre-market, let's say at 21? How would that compare to the previous day's close? There's yesterday's close. So we would be higher than the close. And how does that compare to yesterday's range? Well, here's the previous RTH high. Here's the previous RTH low way down there. So we would be higher out of range. That would be the open type, assuming this were in the pre-market, on Monday morning. But you get the point. It's where would we open in the RTH open? How would that compare to the previous RTH close and the previous RTH range? That determines the open type. That open type dictates which group or column of statistics I use and put here in the pre-market long before the market opens, alongside their associated price. So this morning at 7:15 or 8:15 in the morning, there was an 83.3% probability that price would revisit the overnight volume point of control. There was a 75.5% probability that the price would revisit the overnight high. There's a 76% that would revisit the settlement, value area low, etc., right? And you do those from a study that I have in IRT. Next is the session prices, which are pushed directly from IRT here. And there's nothing that I do that's complicated or magic, except I'm really pissed that I didn't do this, because there would have been my profit target right there. That would have been my 12 points. Anyway, spilt milk. There's nothing magic. It's only data, price levels, and probabilities. These levels are self-explanatory. The only thing that can be a little confusing to some people is the initial balance high and low, because of their naming. That's an old acronym from the market profile days. What these levels actually represent are the high and the low of the first 1 hour of the RTH trading session this day. That's it. They move up with price through the first hour, moves down with price for the first hour, and then at 9:30 Central Standard Time, they don't move anymore. And a certain statistic becomes active then. The levels that I have over here, there's no indicator here or in IRT. There's a POC for the full session, or for the RTH session. There's a POC for the full session. POC, in case you don't know what that is just a marker of the price at which the most contracts have traded so far in the session. So 70.0975 in the RTH session, we've traded 13,465 contracts. That is the most, followed in hot pursuit by 13,106. Now, the very second that price comes down and trades 13,466 right here, this yellow line or the POC is going to move there. It's no more complicated than that. It just marks the price at which the most contracts have traded so far in the session, period. And then the IB lines I already mentioned. There's a VWAP for the RTH and for the Globex, and there's a mid price for the RTH, and that's the end of it. The rest of them are just named levels. That's all there is to it. The statistics study is also real simple. While we're going through it, why not, eh? From IRT, here's the statistics study. It's gracious enough to highlight the correct open type for the day, but of course only after 8:30, so in the morning, this would be reflecting, whichever the previous day was. Anyway, this is also very simple. The study looks back at 2,000 trading days, essentially. Of these 2,000 trading days, we opened higher in range, as we did today, 605 days, 30%. Of the days where we opened higher in range, price revisited the overnight volume point of control 504 times, 83.3%. Oh, looky here, 83.3. Who was that masked man? And it's just that simple, right down the row. Now, certain statistics come up, like the IB statistic that I mentioned. And that says that, and that is only valid after 9:30. Okay. And at that moment, there is greater than a 97.7 or 97.9% probability. And you see that today it was 82.2%, that the IB high or the IB low will be exceeded by price in the balance at some point in the balance of the RTH trading session. That's one of the statistics that we use. And the statistics for the individual levels are put in here, and the IB statistic is the one that I just mentioned. So here was the IB high, and here was the IB low. Okay? And here is 9 o'clock. And here is, let's see if we can see 9:30 over here. Here's 9:30. Okay, so at this moment in time, neither the IB high nor the IB low have been exceeded. Price is right in the middle. But from this moment forward, this will not move, nor will this one. And so we wait for this statistic. We trade down, we trade through the IB low. That statistic has been taken to the low side. So the statistic says that 98.2% of the days when we opened higher in range, either the IB high or the IB low will be exceeded by price at some point in the balance of the RTH trading session. And it only took, whatever the hell it took only took 15 minutes for that to happen to the IB low right here. So once again, that statistic of 98.2 was satisfied. It's something that you need to recognize or come to peace with is that the market is random. The outcome of the very next trade is 50-50. It's a binary outcome. Price can only go up and it can only go down. It doesn't go horizontally. We put time on it. It's binary. This is a coin flip. So it doesn't do you much good to try to, predict where it's going. You can anticipate where it's going, like right here. I anticipated but didn't act that we would take the IB continuation trade from here. There's the risk neutral scale at 16. So now you just put your helmet on, put your feet up, see what the hell happens. And it's gone all the way up, and it would have taken out my second target up here. No, it wouldn't quite. And let's see, where are we here? So we got in at 11. That's 21. Yeah, we would have taken out my second target, and I'd be a real happy guy. But the market is random. The outcome of the next trade is 50-50. So the thing that makes sense to do is to identify a setup that repeats frequently and the criteria that validate that setup, and then capture a statistically significant data set of that setup and those criteria and determine your expectancy. If your expectancy is profitable, then you take that trade whenever it presents itself in the live market. That is how trading as a business is done. And it's not just me that, that's not something I cooked up. That is per the most successful hedge fund and traders in the world. Ed Thorpe, Jim Simons, Paul Tudor Jones, Ray Dalio, Tom Sosnoff, Art Douglas, Tom the trader, the best loser wins guy, right down to people in our level. It's a business of probabilities. And if that sounds familiar to you, it is exactly the methodology of a casino. It's the gaming theory from the point of view of the casino. You want to be the casino. They play no game which they have not pre-identified the expectancy. Given this number of cards and these specific rules, we expect to win 10% of the time. Then they put that game on the floor, and their only mission in life is to play that game as many times as they can, because they will rely on the law of large numbers to compound that 10% to their bank account in millions of dollars. They know that gamblers will win. We know we'll take stops. But that's how you apply a gaming industry. That's really how you approach the business. Over trading is real simple. You vet a trade, and you only take that trade. You only take a vetted trade. Boom. I don't take trades sometimes for days at a time. And this has been particularly frustrating to me because I've been vetting these two IB trades, of which there are only two. There's the IB continuation, which we just saw here, and there's an IB failure trade. Now, and I'm capturing the exact same data every time. You can't change the stop, change the T1, change the T2. Otherwise, that data, that trade cannot fit in your data set for verifying and determining your expectancy. And this has been frustrating as hell for me. That's why I'm so excited that I just got the code figured out to backtest with IRT. Because now I can stop that and get back to the real trading. But you shouldn't trade more than a couple of trades a day. Now, let me just point out to you, in case you haven't figured it out yet, and I'm sure you would before very long. This simple trade right here, that one right there. If you take this target and you take this target, that is 60 ticks. That's $750 on one trade. How many of those do you need a day? There you go. Now, as far as backtesting goes, no, we've rounded the curve for the final 30 minutes here. We've got the market on close imbalance orders coming up at 1450. This was the backtesting story I was going to point out, this backtesting rules and stuff that I've just worked out, which is so wonderful. One of the ones. Now this is completely, I hadn't even looked at this all day. This is completely automatic, right? Based on these rules. And the rules are, this is an IB high failure. This would be an IB failure trade. In other words, a short from some sort of signals that you get up here at the IB high. And I'm not saying that's the right trade to take in this daily environment, but I've been working on this particular thing for a couple of weeks. And I finally got it all sorted out last night. And this just confirms it, because this just happened completely without me touching it today. So what it does is, you'll notice that these lines here are only for my visual reference. They have nothing to do with the code, which is over here. And the graphing is also to do with the code, but that's the reason I have these reference lines, so I can make sure that it's doing what I think it ought to do. Here is the IB, where the IB sets at 9:30. The first rule right here is the IB statistic. So we trade down, we trade up, we trade all around, because boop. The rule says that the previous bar must be the close must be higher than the low, and than the open, and the high needs to be under the IB high. And the next bar, which is the signal bar, the open needs to be below the IB high, and the close needs to be above the IB high. Boom, there's the signal bar. There's a signal bar right there. Now it fusses around, and it trades up, and it trades here, and it goes up here, and it trades back down to within the pullback area, which is the second rule. And that says that the open is above the close, the low is above the pullback area, the second bar opens, and the close is within the pullback. Now the pullback area this is the IB high, so it's 3 points below the IB high and 5 points below the IB high. So this is the zone of the pullback. Then price trades back up to within 1 point below or above the IB high, and it enters a short, which it did exactly there. Trade, trade, trade. Comes down here to my take profit target, my T number 1. Boom. The trade is now risk neutral. Trades around, comes back up here, and this is the stop line, and guess what? It gets stopped right there. Scratch. Completely automatic, had nothing to do with it. And there you go. And that's, and freely shares any of these trades and the setup and all that stuff. It's not like any of this thing is a big secret that we're trying to, that I'm trying to sell or monetize in some way. So, if you come back around the stream, I talk about the setups, and what I'm looking for is in the pre-market, and what I'm working on vetting, and how these trades are setting up. Now, one of the things that's important to think about here, we're going to have the market on close in about 8 minutes, so I'll make this quick. But the reason for keeping the stream or the session in view all the time is to have an idea and fully understand context, which is so important, because you don't want to trade counter trend or counter context. And then when you see your IB trade beginning to set up, IB, in other words, it's after 9:30 and price is getting near the IB high, you can zoom in and get as tight as you want to get to see the actual trigger and those setup things. But you see, if you stayed this way all day long, which is basically 5 minute increments, where was the POC all day? What have we done? What's context? Is it up? Is it down? It looks flat from here, doesn't it? That's crazy. All right. Now I'm going to do the part of the trade deal that I do every day, which is a recap. And we'll start with over here. Let's look at the news. Of course, this is Friday. We haven't gotten our option market on close orders yet. I use two news sources. This is investing.com I like this one, and I've used it for years. You can filter it out for countries and what reports you want, etc., time zone. And I like it because it's easy to make a good, clean screen snap and post into a Discord or somewhere for people to read. You can also see what's going to happen next week. Here are the reports for next week. Well, Monday we've got this Williams speaking, and Tuesday we've got the PMI. Wednesday we've got new home building permits and home sales. Durable goods, core PCE, that's how, and you can also see earnings. Clearly, it's easy for me to use this. The second news source, which I'm using some lately now, is Financial Juice. Both of these are free. You can pay for them if you want to, but anyway, they're free. And this left side is more of a calendar, like investing.com, but then it has more of a squawk box feel kind of over here on the right. So I sort of look at both of them. And that's the news. Once we get the market on close orders in another 5 minutes, we'll take a look at those. Market on close imbalance, I should say. What are we doing on the big picture? Well, we're 93.4% volume as compared to at this same time average, at the same point in time in the day. Here's our ATR. We're now at 3 points. So every minute, the average true range is 3 points. If you know anything about harmonic rotations, I'd love to know how to trade this. I've got it plotted, and it's doing the plotting properly with mean, mode, and medium. But I don't know how to use these values in trading and figuring the stops, to be frank with you. And this is just a statistics thing about IB range. This is the SPX, and this is open interest on the ES. We've looked at this a while, but here we go. I just got through talking about the micro composite. These are the naked volume points of control that we have to deal with. Here's today. This is Wednesdays. This is the micro composite VPOC, this yellow line. You can see all the naked volume points of control below us. Obviously nothing above us because we're at all-time highs. This black line representing this volume profile is the granddaddy of them all. That started plotting November 18th, 2021. That's the data represented with this one. Now, obviously, it's not the Z contract because the Z contract only rolled over Monday. So this is the continuous contract for the ES. Market profile, again, volume profile. Here's our current data. We're a little bit light as it shows, 60-something%. That's 981,000 contracts have traded so far since 1,700 last night. And we're 0.46 positive change. The way that positive change and the red and the fact that these turn red and green are based on where our last price was compared to settlement. That red and green thing is a psychological trigger for all the retail people, like all the Robinhooders and all that kind of stuff. When all their charts go red, they all start selling like crazy and bailing out. And it's simply because of the relationship between the last price and settlement. These are both Renko charts. I guess that ought to be obvious. And this is the ES, and this is the NQ. And minute and a half to the market on close, imbalance. And yes, I'm pissed that I'm not involved in this. Didn't get involved in this. This bunch of fish scales down here was so strange to me, and they haven't moved them. This liquidity has been laying in the book at every other price, every 2 ticks, all the way up. Interesting. So, yeah, I try to keep this at 1 point. It's important for me to try to going on here. There we go. It's important for me to try to keep a sense of scale and proportion, you know. That's why I keep the entire session in range, and I try to keep the price scale at 1 point. So I kind of have some understanding or sense of scale about what's going on. Negative, I don't hold trades overnight. Close everything out at I closed everything out at the cash close at 1500. That's also when I typically end the stream at about 1500. Not much goes on after that. There's a 15-minute curb trade, but so who cares? And I start this, you know, I'm standing here. These are stand-up desks, and I've been standing here since 6 o'clock in the morning. So I've had all the fun I can take. And every morning the stream starts every morning at 8 o'clock, except non-farm payroll day, which is the first Friday of every month. And I started at 7:15, so we can capture a little bit of the pre-market and an analysis of what's going to happen or what to expect in the non-farm payroll. Look at us go. Oh, yes, am I disappointed in me? I would be so over my targets here. Oh, so disappointed. Hey, the thing about the market is there is no such thing as a missed opportunity. There's only the next one. That's a great thought. And this guy at 394 has been sitting up here since 7:45, I think. Something like that. Well, since 9:30. Call me a liar. I've been sitting up there patiently waiting. You can see that I don't have my book map all cluttered up with balls and whistles and colors and stuff because that just confuses me. And this represents the last price. I don't need to know what the spread is. I can see it right here. They're going to take that out, and I am going to be so thoroughly pissed. Well, my goodness. Well, the high time frame in my world, sausage guy, is look at how this. Did you see that? This iceberg came in over here and tracked down, and he finally called uncle and threw in the towel up here. Jesus Christ, that had to hurt. $30 points, basically. No, 99, 29. Okay, 20 points. Call me a liar. The high time frame that I use is the high time frame, which I call the micro composite. And that's we rolled over our. I'm busy reading your guys' stuff and looking at these icebergs, and I'm not paying attention to what the hell I'm supposed to be doing. This is the market on close and balance orders. They roll out every day at 1450, and you read these as follows. This S&P 500 has a sell side imbalance of 1,331,000,000 contracts. NASDAQ 100 sell side imbalance 2,833,000,000 contracts. Dow 30 plus 1,654,000. Mag 7 1,159,000. Imagine that. Just, when you're laying around this weekend with nothing better to do, get your fingers and your toes and your shoes off and see, you can see what the variation in 2,800,000,000 and let's do the NASDAQ. What's the NASDAQ? It's $10 a point, right? Figure out what that 2,833,000,000 contracts at each tick is worth. Staggers me. And we think they're hunting our stops. They could give two shits what we're doing, and they have no idea where we are most of the time. Yeah, have a great weekend, man. And here's something important that's kind of my tagline at the end of every day. Get away from the screens. Do something for your health. Do something for your brain. Rest your eyes. We spend so much time worrying about monitors and resolution and screens and charts and BS and BS and BS. Your mental ability and your brain power, whether you're on tilt or not, and your health is far more important, because that's what's interpreting the signals we see, and that's what is making this, taking or not the signals. So that's an even bigger component, and be aware of that. If you had a fight with mama, or you're drunk and hungover, or whatever else it is, and you're on tilt, watch the market, drink a lot of coffee, but keep your hand off the mouse. You know what I'm saying? It could prove to be a real disappointing experience for you. And I'm disappointed that I just talked myself out of this IB continuation because of the time of day. And that would have thrown me well over the target on all 5 contracts. Back to the point in hand now, the question about the high time frame. So this is my version of a high time frame chart. This is the micro composite. This is an RTH session only. These are daily candlesticks. Wherever price overlaps, I draw or continue to draw a volume profile. Like tonight after the close, I'll pull this over here and include this one, include today's action. And by the way I have this volume profile set up, it generates a high and low volume node, which are these represented by the red and green lines here. They are pushed automatically to Bookmap. It generates a micro composite VPOC. We can see the all-time high. We can see the relationship to the previous micro composites. And then over here, the session prices are also pushed to Bookmap. So we get on this side the micro composite column, where I enter manually these. Jesus Christ, they can't get enough of this thing, can they? Somebody get the crack out of the water cooler. These guys are going to OD here pretty quick. 67.32. Imagine that. Where I enter these various flags manually, and the POC and the micro composite POC, and let's see if we can find some of them way down here. The corn way down here, see? Then these are the high and low volume nodes, which push automatically. This is the full session volume profile, which started plotting last night at 1700. And this is the RTH volume profile, which resets at 8:30 in the morning. Then this is my notes column, which I already went through how you establish the open type, where the statistics come from, which are all entered before the market opens every morning. And this is the session prices, which are pushed directly to Bookmap from IRT. Today, this whole week was a really, today was I really missed a nice opportunity right here on this this IB continuation trade. There's no question about it. But this week was a great time to work on your tan, go on vacation, do something else. You know, we had the rollover on Monday. We had some economic data on Tuesday. We had the Fed announcement on Wednesday, economic data yesterday, and today is triple witching. If you ever wanted a week to stay away from the freaking market, this would have been a real good opportunity for you. I think. And here we go, jamming into our close and the cash close at 1,500. Now, one note about my book map, I guess. The volume bubbles here. Oops, we got to put in the migrating VPOC flags, not drop the ball. These are strictly for my reference. These volume dots or bubbles, whatever you want to call them, they are sized by amount and colored by delta. So there you go. And there we have 1,500. And, you know, welcome. Boy, it's nice to have people dropping in here in the chat. Smack a thumbs up. That'd be great. Subscribe, even greater. Send money. That's the best. Have a great weekend and take care of yourself. That's the most important thing. Be able to remember that as a trader, your first and foremost prime motivation, directive, target, whatever you want to call it, is to be able to trade tomorrow. So risk, account preservation and risk management are the two most important skills for you to learn. And recognize your mental state or hide or whatever you want to call it. Understand that you're never going to eliminate or be able to get rid of or, use willpower to get rid of FOMO, any of these monkey mind things that have been developed within our brain wiring since we've been evolving. But what you must do in trading is learn to identify when they're kicking in. When is FOMO kicking in? When am I feeling those FOMO things? Be alert to that and don't react or act on it. That's about the best thing, I think, the best way to look at it. And the stream, in a little bit here, I'll put the timestamps and all that in with the stream, and then whenever YouTube's through doing whatever it's doing, you can go back and look at anything in the history if you want to. And I do this every trading day from 8 o'clock in the morning until 1,500 in the afternoon, Central Standard Time. And I am thoroughly pissed that I didn't take that trade. But I'm happy about the backtesting thing. That is a huge win on my part. But this would have been no heat and absolutely perfect. And boy, if that isn't rear view mirror trading, internet guru bullshit, I never heard any of it. But, that's the key with those guys is, oh, yeah, I saw this here, and we pull across, we pulled back to it. I saw the trigger, and I took it, and I got all this out. Okay. Tell me why that looks different than that, or than that, or than that, or any of them. That's the trick. The key is having your level or your setup identified and the qualifying criteria that validate an entry. And then you take every one of them and you rely on the law of large numbers to compound to your account. And if you have your risk management figured properly and by that I mean your trade sizes, etc., maybe you did take this one and you're okay here. You're sweating bullets, but you're okay here. Oh, you got stopped out. And now you come back up and here's another setup and you take that one. And now you're off to the races. Okay, if your risk reward is properly set so that you are risking 1 and rewarding 3, in other words, say 1 to 3, certainly not upside down when you're, that's the big internet thing with this bullshit about win rate. Oh, my win rate's 99%. Okay, great. And if your risk reward ratio is upside down, you're broke in 5 trades. Useless. The only time win rate is at all meaningful is when you're using it to determine expectancy. And you determine expectancy by having a large enough data sample size set that you're outside of random distribution, and you're able to determine by having all trades within that random or within that sample size, that sample be identical. In other words, the same stops, the same T1, the same T2. They all have to be identical, otherwise they don't compare. And okay, let's see. I have an expectancy of 10%. You determine that by the win rate times the average winner minus the loss rate times the average loser. So over 100 trades, do you have an expectancy that's a positive number? And the next granularity is, yes, I do. And over 100 trades, I know that I should expect 60 T1. I should expect 70 T2. And I should expect however many scratch and however many stops. And that's really setting up trading as a business of probability and statistics. And that's what's important. Have a great weekend, boys and girls. Go out and do something for yourself. Run around the block, whatever. Basically, get away from the screens. And I'll see you on Monday morning at 8.